So we can shake it again. Wake up the town so we can shake it again. Wake up the town so we can shake it again. Brother, wake the town so we can shake it again. Wake the town so we can shake it again. Shake it. Shake it now. Surrender to the sound. We are so irresistible. We did not come to change, but only to fulfill. But now we got tonight. Try to make things right, to make you lose yourself to this African beat. Wake up the town so we can shake it again. Wake up the town so we can shake it again. Wake up the town so we can shake it again. Brother, wake the town so we can shake it again. Sister, wake the town so we can shake it again. Shake it. Shake it now. Shake it, shake it, shake it, shake it, shake it, shake it, shake it now. Shake it, 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 shake it now. Shake it, shake it, shake it.
Right, hello. Good afternoon to you, ladies and gentlemen. Oh, I'm really surprised from the depth of my heart. I said, good afternoon to you, ladies and gentlemen. You're not feeling it now. So once again, we say welcome to day 2 of our DASA conference, and then welcome back from your coffee break. For those joining us online, welcome back from your coffee break as well, because we had a good time having coffee and networking together. Earlier on, my colleague had said that there wasn't going to be any networking, but please, there is a huge networking cocktail after today's section. So don't be in a hurry to rush home. Forget about the traffic. Let the cocktail take care of your traffic situation back home. So right after the section today, there is a cocktail networking section for you. So all the people that you were not able to meet during the day and during their presentation, they will be there. So we'll make time and take advantage of that, right? My name is Benjamin Ozoanza. I'll be taking over from here till the cocktail is over. Now, next to come on stage, it's a group of people that you can't miss when you're talking about this industry without mentioning them. I always describe them as policy, practical, advocacy, awareness, training. Cup them all together or encrypt them, and you see what they can do here. Having us go through the evolution of banking and digital asset relationship. Ladies and gentlemen, help me welcome on stage this three, do I say musketeers? These three wonderful people that you want to listen to over and over again. One is Madam Audrey. Audrey has been in the space for decades, helping with policies, helping with structures. She was previously at the Cybersecurity Authority, and they were part of the team that were able to bring forth the Cybersecurity Act together with this young man. We normally call him the Hackman. The Hackman. Bring anything relating to cybersecurity or security that deals with hacking, deals with vulnerabilities. If you don't mention his name, you are not part here. And then the powerful house. She's always hiding. She's always behind, but she does all the work. Ladies and gentlemen, if your hands are not beating, help me put them together as I might welcome the team that is going to take us through the evolution of banking and digital assets relationship. Audrey, Eric, and Sylvia. Hey, and Ajwa is also joining. Ajwa didn't tell me. All right, so since Ajwa is joining me, I think no. Right. All right, so I present to you your team. So your time starts now.
Good afternoon, ladies and gentlemen. My name is Audrey Mreku, Mnisi Mreku. Don't mind the accent. I was imported by Mr. Mreku. I'm very much Ghanaian now. I work for the Ghana Association of Banks as head of operations, risks, and cybersecurity. I'll hand over to my colleagues to quickly introduce themselves. There's so much we have to discuss, so I don't want to waste time introducing myself, but these are the important people today. So, Madam Ajwa, over to you.
So my name is Ajwa Osei Nkrumah. I am the head of payments for GCB Bank, and I have been in the payment industry for some time now, about 20 years. So, yeah. So I bring to bear a lot of experience, and I have seen how payments have evolved in the economy now. So I'm very happy to be part of this discussion, and I have enjoyed what I've listened to so far. I hope you'd also enjoy the little insights I'll bring to bear. Thank you.
Okay, I'm Eric Sowabaja. I'm the Senior Manager Information Security Operations at Consolidated Bank Ghana. My field is more of offensive security, so ethical hacking, pen testing, anything hacking. Yes, I've been in the field for at least some time.
Thank you. My name is Sylvia Sedo. I'm an information security practitioner, and I have experience in the telecoms as well as banking sector. It's an honor to be here.
Sylvia is the shy one, but she's the powerhouse as well. She's responsible for policies and ensuring that the hackers within the banks are doing what they're supposed to be doing. Now, I know you're all excited and ready to know what the banks are doing about this, and we want to tell you about the journey that we have embarked on as banks. So these are my colleagues who will help me tell the story. But first, I know you all have questions. Digital assets are becoming part of the financial conversation globally. As my colleagues, you know Bank of Ghana is about to issue a directive, and they've issued a directive that virtual asset service providers should register. Let's tell the world today, do we see digital assets as a threat or as a complement to traditional banking? I'll start with you, Ajwa. Just a yes or no answer.
I actually see them as a complement.
Thank you. So Eric.
From where I sit, I see them. I will say yes and no. I will explain later.
I'm also with the yes and no stance, because yes is an opportunity, but with every opportunity, there are what? Threats. So I believe a balanced approach is needed.
At least there's a yes. 2 years ago, I'm sure we would have all said no. You guys are a threat, but no. Today, at least there's a yes. I can firmly say it's a yes from my side. I'll start off with Ajwa. She's the head of e-banking and cards. You all know that with virtual assets, you cannot walk over the counter and say, I'm buying my virtual assets, so and so make a payment here and there. We all use our cards. So that's why we made sure that we bring you an expert to understand how cards work. Ajwa, tell us about the expectations of customers when it comes to digital payments and in assessing digital assets. What can you tell us? Just tell us a story.
Okay, so we are all customers of banks or even the telcos. And we know that for now, we are not asking the question, why can't I pay digitally? Because these services are being provided digitally. The question we are asking now is, why can't I pay instantly? Why can't it be cheaper? And why can't it be safer than it is now? So customers are very intolerant when they want to access these digital services and it's not available. And this is seen when we go on social media. You see a lot of customer complaints when they are unable to access these services. So yes, customers want these services to be instant. And when you look at the data from GIPS, GIP transactions have increased significantly. In 2024, we had about 71 million transactions. In 2025, we are doing about 94 million transactions. So this tells the story. We want our payments to be instant. But there's also a growing curiosity when it comes to digital assets. Most people, especially the youth, are interested in how it works. They want to understand it more. And from yesterday's discussion and even what we've done this morning, we've seen that there's a growing interest in these. So they want to use these digital assets for international transactions, international transfers, cross-border transactions, and they also want to use it as a hedge, okay, for the CD. So this is also another trend that is coming up. Customers also want flexibility when it comes to limits. So when they see any inflexibility or opaque charges, they are worried and they are looking for other avenues where they feel they have some flexibility when it comes to the limits, and also the charges are clearer. So this tells me the story that customers' expectation is that they expect payments to be flexible, they expect payments to be instant, and they expect payments to be cheaper than it is now. And they would exploit every avenue that is available. For banks, it gives us both an opportunity and a threat. If we do not take advantage of these expectations by our customers, we are going to lose the market. And that is where we need to be very careful. That's why my answer initially was, it's a compliment, because we need to look at it from the positives and see how best we can support.
Thank you, Ajwa. The next question will definitely be based on the response you gave us. Basically, our customers are now demanding for a service. Our traditional way of banking needs to change. Our customers are demanding for a service, and we are ready to provide that service. Now, with stable coins and tokenized payments and the anticipated digital CD, how do you see the traditional card and mobile money ecosystem evolving?
For the short term, I don't see cards leaving the ecosystem at all in the short term. The fact is, that is the only bridge we have for international e-commerce. If you want to pay for anything online, you need your card to do that. So in the short term, I don't see cards going anywhere. Mobile money is what we currently use for our domestic day-to-day transactions. But we know that the trends are changing. So it's important we also evolve with it. What I foresee is what we at GCB Bank currently is doing is that we want to partner fintechs. So we have a solution we call Card as a Service, where if you are a fintech, we want to embed card services into what you are currently doing. So we give you virtual cards, and on top of it, you put your rails on it. So we give you the base for you to do that. And I'm also seeing that mobile wallets would also go the same way, where it won't just be holding funds or your mobile money, but it would also have various, it will be a multi-asset wallet where you can keep your CD. If you have an ECD, it can also be in there. If you have a tokenized deposit, it can also be in there. So this is how it is changing. And we want to grow with the market. So we would also evolve and make sure that we are providing the rails on which the VASPs can also innovate on top of.
Okay. You spoke of a partnership that your bank, Ghana Commercial Bank, is ready to partner with fintechs. Can you tell us more on that one?
Okay.
How can the people in the room take advantage of that?
So for instance, there are two services that can benefit all of us in this room. One is the card as a service, and two, banking as a service. Most fintechs do not have a store of value. Okay, so you are providing these assets, but nobody can actually store value. So I know there's Koba in this room. You don't have a wallet, but you are providing services and you want people to actually use the service. They need to be able to store that value somewhere. And that's the service that GCB wants to give you. So we give you a store of value, and you can then give that store of value to your customers. So they can have like your fintech wallet, okay? And that wallet would be, the infrastructure beneath it would be provided by the bank, which is GCB Bank. So that's one thing we are doing. Another thing we are doing is card as a service. Most fintechs, most innovative people innovating would want to provide a means of payment for their customers, but they don't have it. What we do is we can give you a virtual card that you can embed in your mobile app for your customers, where they can go in for your fintech app, they get a card that will be provided by you, which is a virtual card, and they can use it for any purchases or payments that they want to do. These are services that we want to give our customers. And just 2 weeks ago, we had a fintech tonic where we invited all fintechs to the bank to tell you that we are here to partner you, innovate, we are here, we would innovate with you, support you, and make sure that you are meeting Bank of Ghana's regulations when it comes to KYC, AML, transaction monitoring. We do that for you, and we give you the free hand to innovate.
Thank you very much, Ajwa. One thing that we all forget is that banks don't have money. The money you see sitting with the banks is customer deposits. So when you are coming for money within the banks and say banks don't give out loans, it's very difficult. It is because we are assessing you and we see that if we give this person the money, when the customer comes back for their money, will the money be available? So it's very important for us to remember that the money that the banks, they're just custodians. They're just custodians. And there's so many security layers they're putting in place. So now I'll move over to Sylvia. Sylvia, you cheated us. You didn't tell us about your role. Give us the regulatory side and the security and risk management bit about your role. What do you do for the banks?
Okay, so my role in the bank is basically to advise senior management on the best way to ensure that when you're bringing in technology, whatever information you're getting from your customers, you are doing it in a responsible way that will ensure that both the customer is protected with regards to the amount of monies that they're saving with you, because at the end of the day, we are going to be recording all these things on digital assets or on electronic platforms, and there should be safeguards to ensure that if you deposit your 100 CDs with me, when you come back tomorrow, I can record and tell you that, yes, it's 100 CDs. And whenever there's a change, both I and you should agree that, yes, it was done in a way that can be audited, and it was done with the consent of both parties.
I'll hand over to my MC later, and I'm posing this question to him. I want him to tell you about CIA. CIA. He's a cybersecurity specialist as well, and we use him a lot when we're doing our capacity building. To build on what Sylvia has told us today, he works mostly with young children, so he can granularize it for even a 10 or an 8-year-old for you to appreciate CIA. So Ben, this one is for you. When the next time you get on stage, please explain CIA for us. Now, Sylvia, you did mention that there are guidelines in place. We know Bank of Ghana has come up with one that emphasizes on anti-money laundering, consumer protection, and cyber risk. What are the biggest risks that banks are dealing with when it comes to, or are afraid of when it comes to digital assets under this framework?
Okay. So with digital assets, when we look at it from an anti-money laundering perspective, the whole idea of due diligence. Who are you? Do we know you as a service provider? And then if a virtual asset provider is coming to give the service, do they really have the required technology as well as the requisite manpower to ensure that they are following regulatory guidelines? Because at the end of the day, we are only in business because the regulator is allowing us to do so. As if you were here yesterday, he said he's both policing and cheerleading the VSP. So from a compliance perspective, we have to ensure that they are indeed meeting those requirements and they do have the requisite technology, or more or less, they are what they say they are. They have the manpower to back it, and they have a responsible senior management. I believe in the previous session, one of the panelists pointed out the fact that boards are needed so that their experience will be disseminated to ensure that best practices are being done within the organization. Also, because of the decentralized nature of virtual assets, there needs to be a little bit of a customized way to ensure that we are tracking where the money is coming from, so that we are ensuring that it's not money laundering, because most of these money laundering activities, they are from criminal proceeds, so we cannot be seen to be aiding that as well.
Okay. So with the Bank of Ghana directive still in cooking stage, it hasn't been issued yet. What would you advise us to do as banks and fintechs and innovators? Should we do the wait and see approach, or we should go ahead with the sandbox and testing?
Well, as you said, there's sandboxing. And obviously, we were told yesterday that it's more or less to get a yes or no answer from them. Now, with regulations, they are here to protect the customer. As it was rightly said, we are all here and there were schemes. One thing about Ghanaians is that, or may I say people in general, is that if something is profiting you, you would always make noise about it, like, allow me to do it, allow me to do it. But once it backfires, where will we all run to? We will all pack our things and go and say that, oh, government, you do something, you were here, we were doing this, and you didn't say anything. So definitely a wait and see approach is not going to work. So yes, the guidelines, the exposure drafts that they've given out are indeed setting this the space for us to play the game. So as we are seeing the directive, obviously it is telling us their tone and the direction that they want us to go. So we as banks, we know our roles. We are not supposed to actively participate, but we should help with the typical banking activities, whereby we help with settlement and ensuring that the exchanges are going right. So we as banks, we know our role. Obviously, as others have started tonics, forums, etc., we as well would also have to look at how best we fit in and how we can support those transactions. Because even though virtual assets are a no-no here, we all know one or two people who have a wallet somewhere. So as the tone has been set, the onus is on us to assess our operations, see how best we can fit it in, and ensure that we are making it available to our customers in a responsible way.
Thank you very much, Sylvia. Now we'll move on to Mr. Baja. When you were introducing yourself, you mentioned one, we all know that you are a hacker. That's all what people think, you are a hacker. But you added a name before the hacker. You said ethical hacker. Why would a bank hire an ethical hacker or a hacker? Why do we have hackers within the banking space?
Okay, sure. So I always say this, that why wait to get robbed when you can set stuff in place. So banks would hire an ethical hacker. First of all, the word is ethical. Yes. So banks will hire an ethical hacker, who is a hacker who is hacking with authorization or with permission. The banks will hire us to find the loopholes first, or to find to be the thief in the environment. But I mean the good thief. And that is the main reason why a bank, because when Sylvia was talking, said let's not do wait and see. So the banks are also not doing wait and see. Let's find the things first, and then let's try and fix them or mitigate them before the threat actors comes in.
Okay. So basically, banks are always testing their systems. So they've hired thieves. They send a thief to catch a thief. Concept applies within the banking space. Now, what vulnerabilities do you see with us banks partnering with virtual asset service providers? The journey of us integrating, looking at APIs, looking at smart contracts and the wallets. How do you see that journey?
Okay, so the first vulnerability I'll talk about is the skilled personnel or lack of skilled personnel, and that would always be my number one vulnerability, because without the knowledge of something, how do you even protect that thing? And if you look at even traditional web application, Web 2.0, not to talk about smart contracts and the virtual assets, yes, just normal web applications, how many skilled personnel do we have to even test these systems or to even test these solutions? Not to talk about smart contracts, Web 3.0 infrastructure. Aside that shortage of skill, how many SOC analysts do we have to even investigate when there is an attack in Web 3.0 infrastructure? So my number one vulnerability I would always see in this particular integrating with VASP would be one, shortage of skill. Then two, that I would talk about is API risk or API security. Reason why I would make API risk as my number two vulnerability in this integrating stuff is, one, most banks have even problem consolidating these APIs. Not to talk about security on those APIs, because you see what is happening in most banks now is people come, or the business goes to get the clients, goes and gets prospect clients to transact business with. Now they fall on developers to come and build APIs for them to consume. Now these APIs are just built, most of the time they are built ad hoc. So the client is in, you need to build the API. The API doesn't sit anywhere. The API is built, given to the client, and that client comes. So most people don't even have a consolidated API hub where all APIs are sitting there. You can say you are putting security even on it. So that also becomes a vulnerability, because once you don't even know where all your APIs sit, how do you even secure them? And then the third one I'll talk about is, yes, like I said, smart contracts. How many of the banks are even privy to this infrastructure? So that particular vulnerability would always be there, and that is the reason why because no, in a sense that it's a threat, in the sense that these vulnerabilities would always exist. Even Web 2.0, we are not even understanding it fully. We are not even mitigating it fully. How much more when we come to smart contract and Web 3.0 infrastructure?
One thing technical people do, I've moved away from the technical side. Now I'm looking at business. I left the technical world. They like using big words. API, this. What is API? Tell us in simple English. What is this API? Give us a use case.
Okay, so simple. Let's say I want to communicate with another person. Most definitely, I need a medium to communicate in. So these APIs are basically I'll say call and response. So I need A to be done. I call A gives me a response. So these are more like interlinking between one entity and another entity. So a bank and then a VASP want to transact business. Definitely the VASP needs to consume certain resources from the bank internally. We can't tell the VASP to come and set up inside the bank. So the VASP has its own stuff. The bank also has its own stuff. So the API is what links them together, or what makes transaction goes on between them. I hope I did. I wasn't technical.
That clapping means you tried. You tried. I see three of people clapping their hands means you tried. Now, one of the biggest challenges we are also seeing as banks is standardization. Banks are quite mature in terms of frameworks that they use to secure the data. But there are new fintechs and innovators coming up, which might not even be able to match what the banks have acquired in terms of experience over the years. Take us through a process. What are these standards, and which, as an innovator sitting down there, give them maybe advice in terms of if you want to work with the banks, to connect with your APIs with the banks and have no challenges, these are the things you need to look at. These are the standards that you should be preparing for, getting certification for.
Okay, sure. So when I was even talking about the vulnerabilities, I was talking more on the bank side, but then the VASP side also, or the client side, also have to be doing same stuff. And when it comes to standards, testing guidelines and stuff, the banks, like Madam Audrey said, the banks have regulatory standards that we follow. The BOG Cyber Directive, we have the ISO 27001, which is mandatory for all banks. We have PCI DSS, which once you are dealing with cards, you need to be compliant with. I think the VASP also have to do same, because you see, it's more like two environments coming together. I can secure my end. If you have not secured your end, it means you end up introducing vulnerability, or you end up introducing issues to me. So I think some of the guidelines that needs, or security standards that needs to be put in place should be that the VASP providers or the client side needs to also regulate themselves when it comes to ISO 27001. At least basic ISO 27001 they should have. If the VASP is handling payment with cards, then they need to also regulate themselves with PCI DSS. These are simple standards that at least it sets you at a tone. Because I have a saying that everybody will be hacked. Yes, don't get me confused. Everybody will be hacked. The fact that you are not hacked does not mean that you are doing something extraordinary. They have not gotten your time yet. Exactly. But at least you put yourself there a bit to make their work, or to make these threat actors work a bit difficult. So at least you have standards that you are following. You have a body that you have regulated with, so that if there's anything, at least you would get support from them. And the reason why I said everybody will be hacked, Microsoft is being hacked. And we all use Microsoft. We are all end users. The people who are manufacturing the thing are getting compromised. The good thing is that they have bodies that at least when they are compromised, they bounce back easily, or they're able to jump back on track. And that is what we need to also come at, that these regulations would at least help you, that once you are a target or you are compromised, at least you have some standing to bounce back again.
Thank you very much, Sir Eric. I'm sure you are all happy now, and you can see that the banks are ready to partner with virtual asset service providers. We need to be at a certain level of maturity. Now, as banks, if you could give us a piece of advice on how we should position ourselves I know GCB has done a lot. How should banks position themselves to prepare for the future to work with virtual asset service providers? So this question will apply to all of you.
Let me give you some good news. You see, I've worked with Eric. Eric used to work with us. And as you can tell, our partnership was good because he was coming from the security side. I was coming from business. So we never agreed on anything. We never agreed on anything. But the good thing we learned from them is that it's important we consolidate all our APIs. Okay, so that is what at GCB we have done. We have an API hub where we make it easier for fintechs, VASPs to come in and benefit from some of the services that we provide. So that is one thing for you. And we make sure that the burden of securing your ecosystem doesn't sit only on you. We partner you to make it better. But on this digital assets journey, it's important that as banks, we partner quickly, okay? And then we all learn quickly and fail quickly so that we can learn from those failures, okay? So that is what we want to do. We need to also build our capacity to understand the ecosystem. If you understand the ecosystem, then we know how best to partner you.
I should have told Adjoa that 30 seconds, otherwise she'll take the whole floor. Our time is limited. So Eric, over to you.
Okay, so let me say one good thing that we are also doing in our bank or at my space is that we...
Which bank, please?
Consolidated Bank Ghana, the best bank in Ghana. So one thing that we are doing is we have something we call incident response drills. Because my earlier submission, I said everybody will be hacked. But then what do you do? So at least let's prep ourselves for the inevitable. Let's prep ourselves in the case that we are hacked. Even though we have not been hacked, let's have drills. And then let's bring all stakeholders together that in case there is a cyber attack, what do we do? What do the corporate comms do? What would legal do? What would customer service do? What would business do? What would staffs do? What would our customers even do? So we try as much as possible to organize some of these drills frequently and then go through these drills just to prepare ourselves in case the worst happens. So this is something that I think we are doing, and yes, it's helping from my side.
Mr. Peter, the next summit we should have a drill. CBG will sponsor. Whether they give us the platform or they give us the resource persons to help us with the drill, we can assure you with that one, as the Association of Banks, I will make sure that they provide us that platform and that drill. Madam Sylvia, advice for us.
So my take will be on the skills, getting the specialized training as well as investment in technologies, because as we all know, digital assets will come with its own inherent technology tool set, and training and awareness has to be across board, not only between the virtual asset service provider at the banks, but to the customers as well, to really understand what a virtual asset is, as well as the risks involved. And then building those capabilities, guardrails, as well as the specialties, because once you go in, it becomes a shared responsibility, and we would all need to play our part. But in order to play your part, you have to be informed. You have to be aware of what it is you're doing and what risks you are willing to take on an individual level, as well as if you are a service provider, and then we as the bank who are going to be the back end to it all. Thank you.
These days is responsible disclosure. Working for 24 banks, I would cast the net back at you. Let us work together and responsibly disclose. When you see now that we are partnering with fintechs to enable the banks to trust our partners, we need to work in a space where we'll be sharing data, we're sharing threat intelligence. And that can only be done if we share this data responsibly. Let us not see this on social media when you know that the Association of Bank exists. You have the skills, you know how a payment system might be compromised. If you see such data, please reach out to this Ghana Association of Banks. Let us reach out to our member banks as well and responsibly disclose these vulnerabilities so we can better serve Ghana. There's an Akan proverb that I like that says, if you see your neighbor's beard on fire, fetch water for yourself. I want to tune it up a bit. If you see your neighbor's beard on fire, fetch water and go and help your neighbor put out that fire. Because what we are talking about, what we are dealing with here, it transcends borders. Today it might be sitting with a VASP, tomorrow it is a bank. It transcends borders. Sitting here, it could be Larry in South Africa experiencing something. If you see that data, Larry, that something is happening in Ghana, reach out to us, alert us. Let us responsibly disclose this data so we can protect Mother Ghana. Thank you very much, ladies and gentlemen.
A round of applause for them. Thank you very much. Thank you very much. Madam, I will answer your question. Don't worry.
We didn't take a picture. We want to take a picture.
Please come and take a picture. We need to store this in the digital asset. Okay. Whilst they're taking the picture, Madam, give me an assignment. So I'll go ahead and do the assignment while she's taking the picture. So, Madam Audrey, I thank Mr. so much. Now you are giving me proverbs in tree. It's not easy. It's giving me proverbs. Wow. Thank you so much. So, first one, he mentioned about CIA. So let's take CIA. So it's confidentiality, integrity, and then accessibility. So let's take it this way. Confidentiality, with most of us working or using WhatsApp. When you send in the message, WhatsApp always tell you that it is an end-to-end encryption. So when you send in the message from yourself to your other person and you're chatting, it is confidential because there isn't any stranger seeing whatever you're communicating. There is a but don't worry. For now, just keep the confidentiality. Then integrity. Imagine sending 1,000 Ghana cedis to someone through Momo. And then you call the person and the person tells you that I received 800. Integrity has been tampered with. It should be the same amount you send from your end to whoever is receiving that amount of money. Then the last one, accessibility. So they were speaking about banks. Most of us use bank apps. When you are in need, critical need, you need money from your bank account. And then you log in on and it's not going through. And the person standing next by you is ready to receive their money. You are not getting access to it. The system needs to be accessible anytime. So the moment you try it, you should be able to withdraw and pay. So that's the acronym for CIA. It's not the other one, the CIA other one. This one is for us in the ecosystem. So, madam, did I do justice to it? Let me help my brother a little bit because we, the technical people, sometimes when we are doing the jargons, you don't understand it. The API, Application Programming Interface. Take it this way. You go to the restaurant, and then whilst you sit, you're about to make your order. Then the waiter or waitress approaches you. Try to take your order. Now, that waiter at that moment is serving as an API because the people at the back end, those that are cooking or preparing your meal that you are ordering for, they are the back end. This waiter will need to take your request to them to finish whatever they are preparing, and then they bring it to you. So the API there, that waiter is serving as that, is the front end or the interface between you and then those preparing the food. Thank you very much. At least you should have clapped well for me. What is this? And also, don't be in a hurry to go because I'm serving you as the API because at the end of this session, there's going to be a cocktail, networking cocktail. Please don't go. Your requests have already been taken. and they finish with that. If you leave, please don't go. There's a lot for you after today's session. And to move on to our next session, I also want to bring in an API. Please help me welcome Mr. Francis, who is going to give us something small before the next session comes in. It's something small he's going to give us. Francis, come on, come. There are a lot of mics here, don't worry. Let me see if it's on. Yeah, it's on. So over to you, Francis, before I bring in my next section.
An African proverb says that a tree that has deep roots fears no wind. So a nation that knows the value of its assets fear no future. Francis Ofosukobia is my name. My message is Medasi. In those who are not here, thank you. And you've been doing English, so I will do three more to welcome our international guests. Then I will migrate to the English. Otradi amponyankopon Yehua Adam yen ora ye friend Peter Frempon Manson. Sena hodie na chedie ni nimdie wan fan to no ho so ana no ani na de nemum ode boa Ghana man abibi man se ye benya nkoso ne yenya nimdie ade atena se ahwe ye ho ne ye busua Mr. Frempon Manson yeda wase any wo company Promas any nipa wo boa wo nyina ma wo ye bibia bema Ghana man any Africa enya nkoso Mr. Frempon Manson, your vision and missions translate into the transformation of Ghana and Africa's development. We cherish so much. We see a beautiful room. When you got the money, you didn't pay for Garamsey's site to be mined. When you got the money, you didn't pay for mercury. You didn't pay for cyanide to be digging and spoiling our waters and the lives in the waters. The Afram River, River Ofe, Pra, Densu, Lake Bosomutre, the Volta River and the Volta Lake that gives energy to the industry and gives light to the young African boy to read his future inheritance of his physical assets and to give light to the old man to find his way to the boardroom to tell the young man what the future he has. Thank you very much. Thank you, Professor Evans Tony, for not bringing the gun that kills the African, for not bringing the shirts, for not bringing the wine, for not bringing the swords, for not bringing things that we cherish so much. When you bring the guns, it kills Africans. And our animals that serve as the V8, the elephant, the camel, that our people used to travel on the deserts and carry goods. When you came, you didn't request for that because we have to kill the animals for the ivory. So we have our elephant with us. Thank you.
Hi, Nakode here, and welcome to Africa Discourse channel. Imagine a place where ideas flow freely, like the great rivers of our great continent Africa, where stories about innovation, growth, and then ideas that are painting and shaping Africa are being told. From the Cape to the Sahara, and then from the tech startups happening in Lagos to Nairobi, where the tech innovations are, ADC brings you the stories that matter, the conversations that are inspiring our generation, and then ideas that are transforming Africa. But hey, it's not always serious business here at ADC. We also give you the scoop into the latest trends happening around the continent, untold stories in Africa, and a large dose of fun and entertainment. Join us as we delve in, explore, laugh, share ideas, share stories, and maybe you can find your next big idea on Africa Discourse channel. Welcome to Africa Discourse channel. Catch up with us at www.discoursechannel.com and follow us on all our social media pages at Africa Discourse channel and get the latest.
Actually kept our history for us in a bag. Thank you, Francis. Thank you very much. Next to mount the stage, I don't think you want to blink. You want to just watch your phone or you want to be distracted, because I'm bringing on stage two powerful software platforms. that you're going to love to interact with and then hear from. And next on stage is going to be a fireside chat that is going to deal with empowering women in digital asset. And they are going to help us pave the way to innovation and leadership. Their track record speaks well about it. Yesterday, you saw one. This morning, you've seen another one. Ladies and gentlemen, help me bring on stage Professor Tonya and then Kamel to do us the honors by giving us an all-lady affair and then a conversation that will take us to the next level. Innovation and leadership. Thank you very much. You have a microphone there. And there's another microphone there too. Thank you.
Test, test.
Okay. Thank you so much. I've been looking forward to this.
Me too.
For some time, because not only in our professional capacity, but certainly in our personal capacity, that anytime I see a dynamic woman from the Pan-African diaspora who hailed originally from Haiti, and represents us so extraordinarily well around the world, it gives me great pleasure to introduce Carmel Cadet, the founder and CEO of Mtech. And through our conversation, not only do we, by our own example on the stage, demonstrate, and has certainly come before us and will come after, dynamic women in the space, but the best way to learn about what women are doing is to talk to the women who are doing it. And so with that, I welcome you for any remarks you care to set the stage, and then we'll get into our conversation today. I want to go through 5 brief areas that all come together: the vision and the impact that you've worked on, leadership and resilience as well, innovation and regulation, Ghana's future, and how this all fits together with what you're working on the continent, and finally, global lessons for local leadership. So first, Carmel Cadet.
Thank you so much. And it's always a pleasure to be in Ghana. For those of you who know, Ghana is almost my second home. I am originally from Haiti, and it's been a fascinating past 7 years. So I'm happy to be here to be able to share, and also start by saying Ghana has been so good to me.
That is brilliant. And here in Ghana, and you all heard a bit of my story in my travels here and what I've learned since being here. One thing that I took away from President Mahama's speech at the United Nations was how he called very forcefully for women to be at the center of this technological innovation here and this financial rebirth. I can think of no better work than the work that you are doing. So I invite you to talk about what you've built at Mtech, particularly to modernize central banking. And you are focusing most specifically on the motherland.
Yes. So as you mentioned, I was born in Haiti. I'm originally from Haiti, born and raised there. For political reasons, we ended up migrating to the US. And the first thing that when we got to the US, one of my mom's friends told her, take every credit card they give you, because this is how you build credit in this country. It didn't make sense to me at the time, but coming from Haiti, so Haiti, to give you context, Haiti has about 20% banking penetration rate. We've been going through a lot as a country over the past 200 years. And when we migrated, getting into the US, where you have financial products that are not usually available where you're from. And for me, that was the first time I started understanding financial markets. And in the US, unlike in Africa or in Haiti, people use credit a lot, right? To finance, whether it's home, whether it's cars, whether it's education. But for me, what that also said is how important money is to our lives. So I really pretty early on got interested in financial services. I ended up getting a job as a teller as a bank, and that was my first retail banking. Then I went into lending, where I became a lending officer, a credit officer. But so the funny story is, I worked at a credit union for a company, IBM, right? So they have credit unions for their employees. And I started seeing kind of how people who are working in that company kind of were able to get loans, were able to get credit. So I started asking, like, what does this company do? And I realized that it was a technology company. And I ended up getting an internship at IBM. That really was the beginning of the story as far as how my interest in financial services got into tech. And then I got to see how powerful tech is. And IBM, I like to say, not much in Africa anymore, but you get to build essential technology that you don't even see, that you use every day. It's not consumer product, but it's very critical infrastructure. So I fell in love with tech, and I started a career at IBM, which led me to work. So my background is in corporate finance. So I studied in corporate finance, understanding technology, how to commercialize technology, how to profitably build technology solution, and that's how it got started.
When you think about how you landed at the intersection of finance and technology, both of those areas are very much dominated by men. And so I wonder, and the inspiration you provide with your own experience. I know life ain't been no crystal stair. And so talk to us about some of the challenges about being a woman of color in general, but Black woman in particular, in these heavily dominated white male worlds.
Sure. So both tech and finance are primarily men dominated, especially in the US, I have to say, which is very different in Africa, which is part of, I think, the success story too. I've always taken an approach of learning and putting myself in positions to learn. But I had a very dramatic experience in that world as a Black woman. So for women in the room, sorry guys, sorry men, but many of you will relate. Growing my hair out one Sunday afternoon, 7 p.m., my hair falls out. And the only thing that's available is a barber. And I have a meeting in corporate America, 9 a.m. Monday morning. I shave my head and I walk into the office the next day and nobody recognizes me. And I was in the elevator. My boss didn't even say hi to me because he didn't know it was me. Right? It's quite an experience, kind of like when you put yourself in that situation. And I was very self-aware, right? But I had no choice but to go. If I could, I would have stayed home, kind of found something else to do, go find a wig fast, go do something, right? But I didn't have that choice, and I had to walk into that moment and own it. That was quite something. And at some point, you kind of find yourself, and you accept who you are, and you show up in a room, and some people will open doors for you and some people will close doors for you. That's just the way it is. And I decide to focus on the doors that are open.
Yes, and the doors that I see open as going back and forth between the US and the continent, the doors certainly feel open here.
Yes.
I have been really, really inspired to see the dynamic women who have taken center stage, who are absolutely expert in what they do. Talk about perhaps any mentorship that you can think of. Certainly you have mentored, so it's always a two-way street, but people have sown into us and we continue to do the same. So talk about the power of that.
Yes, absolutely. I am a child of mentorship, I like to say. I was fortunate enough to have women of color, Black women who, whether it was someone to talk to, whether someone to get advice on career, I didn't always know what I wanted to do. I changed my major in college 3 times, right? I didn't know until I landed that internship, put me in corporate finance. And then my mentor at IBM in New York was a woman from Sierra Leone. That's who I got paired with to teach me the work, right? And to this day, I give her credit for helping me succeed that internship, because through that internship, I got a full-time offer and I spent 10 years at IBM. And that led me to being able to do what I do. So sometimes we joke, she's like, you spend more time in Africa than I do, right? That's the funny cycle of it. But I've been very fortunate to have women around me to either hold my hand or guide me or be an ear to that. And that's part of the story. That's part of the story. And I try to pay it forward. It's not easy, but it's a must.
It's necessary. It's essential. It's essential. It goes back to this concept of, I talk quite a bit about cooperative economics. I talk about that history from a Kwanzaa principle in the United States, but how it really is connected to the continent. Going beyond cooperative economics is certainly, and we've heard this theme echoed, particularly with the last panel, but in all sense of, we talk about the interoperability of the tech, but we also must be in constant communication cooperatively. You've pulled from a lot of different resources to focus on what you've built at MTech. Tell folks a bit more about the system and how you have, what the focus is from a central bank digital currency point of view.
So before I say that, I'll actually, for the record, say the first time I heard Afrobeat was from a Ghanaian, and it was R2B's, and never looked back. Never looked back. And he's now one of the investors in our local company. So you build community that way. So the story on how I ended up building MTech, it is 2016. 2017, I hear this thing about blockchain. I learned about blockchain before I learned about Bitcoin. Weird story, but I learned about the technology before I heard about Bitcoin. So for me, it became clear. So imagine at that point, this is 15 years being in the US. I'm interested in financial market. I haven't been able to find the solutions, that would help Haiti. And then blockchain came to my radar, and for me it was an answer to a problem. Kind of, how do you use technology to bypass some of the difficulties to access finance, right? So for me, I became very passionate about how do you bring good financial products, safe financial products to more people? So how do people access financial markets? Heard about blockchain, and around that time IBM launched an IBM blockchain division. I was leaving for maternity leave, so I didn't know what to do, and as I came back, I was on maternity leave, I opened my first Bitcoin wallet, and trying to learn about this space, and got really interested. I was really proud because it was hard back then.
Yes,
you didn't have an exchange to go open a wallet on. You literally had to figure out the code and command lines. But as I got into blockchain, start realizing how the technology can be used in different industries, and decided to put my passion around financial services, right? Around that time, IBM, we decided to start building a platform that would allow banks to tokenize their deposits and then settle cross-border transactions without SWIFT. That was 2017. So the idea of using tokenization to represent an asset in the financial market and to solve a problem when it comes to cross-border payment, that's kind of where we started. We went to the regulators, and the regulators said, what the heck is a stable coin? What are you guys doing over there? IBM got scared, and IBM said, shut it down, shut it down. But what came as an opportunity was what would turn out to be, and what is now, the first central bank digital currency that got launched. So that was in Bahamas. And my team and I decided to kind of put our hats in the ring, and we won. Was not expecting it, but we won. So
Yes.
Thank you. But and of course, being from the Caribbean, this is it, right? I mean, why not? Kind of turn everything. This is what we're doing. Didn't work out for IBM, and IBM decided to kind of focus on cloud computing instead of blockchain. It was 2018, so early, no one really understood what this was. And I had the opportunity to leave and start my own firm and become a business partner to IBM to go try it outside, right? Very big decision. My son was 2 at the time, and my husband also has his own company. So I was the corporate money,
Right.
and he was the business
insurance,
money. So it was a big decision. But ultimately, for me, the light bulb that came on is my understanding of blockchain. I didn't grow up a central banker. I'm not an economist, and I barely talked to central banks before starting it. It was really about the problem that I realized that we could solve. What if you put cash on blockchain, right? And then who prints cash is the central bank. And that was the very simple, naive idea that got me started. I said, if I can help central banks think about taking paper cash and enabling digital finance, you don't need a bank account to use that. You don't need even KYC. I understand now for compliance and regulation, it's like you need for travel rule and everything else. But back then it was, the technology can handle it. The technology can give my aunt in Haiti access to money right now, right? Without going through Western Union at a fraction of the cost. That was a problem I was solving for. And it still is, by the way. My aunt is still in Haiti, and she got robbed at the bank about a few months ago. And it just reminded me to stay grounded and to keep the work, because that's what I think the opportunity is. Everything else is amazing. Kind of, start discovering how can you tokenize commodities and give Ghanaians access to fractional gold. The poet did so well in talking about how you can build wealth and pass on inheritance to your family, to your kids. That is so powerful. I mean, I don't know if I'm making, I feel like sometimes I make a big deal about this. So it's like,
No,
that's a
power.
big deal,
Right.
Because you have things that you're walking on. You have gold that you're walking on. You have ivory that you're walking on. And globally, it's valuable. It's literally valuable in financial markets around the world. People pay for that. You have China that makes their national security with something that you're walking on right now, right? And the idea to have a technology that enables you to hold it on your phone, right? That if you have something, if you have an emergency, if you need to pay for school, that's something that's commercial, that's something that's globally accepted. I get excited about this stuff. And that's what keeps me, MTech really went that way, because central banking is a very, invisible layer of financial markets, and no one is actually addressing that problem, right? They see central banks as regulators, and no one likes regulators except for Kwame Opong. Kwame is good, but no one likes regulators, and no one ended up building for them, and that's what got us in this space, and I love it.
We see that not all governments are as enthusiastic about central bank digital currencies. And so it's been quite heartening here to see all of the activity focusing on the power and the promise of every layer of finance and banking having some input, and that's essential. Otherwise, the market becomes completely privatized with no alternative. And I think we move back in time as a matter of inclusion and equity, economic sovereignty and the like. We have just about 5 minutes. And so I wanted to ask this question, and then we'll turn to any final thoughts that you might have. Make the case. You started to make the case, but I want you to, spend a couple of minutes making the case for central bank digital currencies.
So I ended up reading a book about 6 months in, starting MTech, that makes the argument, especially in the world of crypto. Crypto was born anti-central bank, right? We're not supposed to have those institutions anymore. So you can imagine when I first started MTech, I would speak about CBDC and people would just throw eggs at me, right? That's not what you're supposed to be doing. We're moving away from that. Stop that, right? Don't help those guys. But there's a very fundamental, at least first principle, that I end up going back, and that keeps me grounded. There's an idea of you have a tower and you have a square, right? And people in the square usually always have, complaints about what the guys in the tower is doing. So the tower is whoever is making the rules. The square, people are outside and living life. people always have a problem with the rules. You know, someone will have a problem with this rule, someone will have a problem with that rule, and so on. And you end up having revolutions and rebellion because people get fed up and they fight, right? And ultimately, people who lead, they lose battles. Whether you want, you know, French Revolution, history shows us. But the truth is, left alone with no rules, we as human are chaotic. We cannot be trusted. We don't even trust each other. And sometimes it is a stage of the journey to be mad at whoever is making the rules because it's not working for us, but we will always need rules to be functioning. So I say that because in central banking, it was around the time where you're really saying the idea of anti-central banking. We don't want rules. We can create our own money. We can issue any tokens we want. Decentralization. And the bet was that ultimately that was not going to be the long-term sustainable approach where everybody in the room today can just issue their own currency. Which currency are we using? Who's backing it? Why should I trust you to give me a currency compared to something else, right? So just because Bitcoin was successful does not mean everybody can just go. There's a trust factor in money that the central bank specifically plays a role at. And there's no way around it. And until someone shows me a better model for that, I say that central banking will change. Central banking, not central bank, central banking itself, the roles that it plays, it will evolve, but we will always need it. So this is my defense of central banking. And of course, cash as a currency is the last resort. When you think about bank deposit, and Madame did such a great job in saying and reminding everyone, banks are custodians, right? This is, you have private money and something can happen to the bank. They can have a cyber attack, they can disappear, they can make wrong financial decisions and your deposits disappear. But central bank money plays a different role and provide that trust in the system that we all need. When something is happening in the economy, everybody lines up at the ATM to go get cash. That's central bank money, right? That's the one we trust the most. So the vision here is to, as we evolve into new plumbing, new rails, and new technologies, how do we maintain that sense of trust in the system?
Perfection. And in our final moments, please, some advice for women coming behind you who see, understand, and want to participate in the vision.
Hold your breath and walk in the room.
Amen.
Just walk in, and you'll be surprised sometimes what's on the other side. That I've had people, I say that Africa has adopted me. And I always say thank you. The first time I came, I used to be on the sideline in a corner at the events, right? And I met Kwame Opong at the first event that I actually came to Ghana, and we were just roaming in the rooms. At the time, he was at the central bank. I didn't have MTech yet, but I met him. That's how I met Kwame. So walk in the room, right? Listen, learn, and just trust that if you have a problem that you want to solve, that you have what it takes to solve it. That's, I know it sounds cliche, but that's fundamentally the thought that actually you just have to believe that. You just have to believe that.
Family, please join me in thanking Carmel Cadet, founder, CEO of MTech.
Where we advocate and engage regulators and policymakers in the US to educate them on digital assets. So it's kind of a full circle to be here.
Right. So, quick one. If you hear and then you applied for the pitch, kindly see Peter right outside now, because your session will be coming on soon. So if you did apply for the pitching competition, please see Peter right outside, and your session will start anytime soon. Thank you so much, Prof. And then Kamel. That was insightful. I think maybe the next time we'll have to have a masterclass as well. So we'll bring things into perspective and shape. We're going to have a speaker joining us online. And the speaker is going to present on transforming custody, trading, and compliance with blockchain whilst addressing technological and regulatory challenges. Now, this person happens to be the CEO, founder of Heritage Lab. Ladies and gentlemen, if you are ready, because I'm ready, let's make welcome Darren DASA to do us that honors by giving us a presentation. Gary, can you hear me? Hello, Dari? I can see you moving your mouse, but I can't hear you. Hello, Dari?
You can hear me.
Now I can hear you. I wasn't hearing earlier on. Yes, so welcome, Dari. Over to you. Take us home with your presentation.
Right. I don't know whether you can can you see my screen and I'm speaking? Hopefully
I can.
You can hear. So
we can see and
MC,
can hear you.
Hear me, let me know that you can hear me.
I can hear you. I can see your screen.
Okay, cool. Right. Good morning to all of us in, okay, so it's afternoon in Ghana, but it's morning where I am. I'm currently out of town, and I'm happy to join this great conference this morning. I think it's the first of its kind in our part of the world, and it couldn't have happened at a better time. This morning, I want to look at custody when we talk about digital asset, because for me, and the question is, if we don't have the concept of custody, do we think that the whole idea of digital assets can even manifest? Can we even drive transactions when it comes to digital asset? And when we talk about custody, we're looking at how we store these assets, and how we prove ownership, and how we can also ensure that transactions are trusted. And we are also looking at several layers of this. Let's say three layers that I want to touch on, which is the technology component of it, the governance component, and the compliance component. When you're looking at technology, for example, the cryptography, the wallet, the secure infrastructure, and also when you look at the governance, you're looking at the rules, the permissions, the oversight. And I'm hoping that these things might have been touched on already. My presentation is entitled Transforming Custody, Trading, and Compliance with Blockchain. So like I mentioned earlier, one of the things I know is that I don't know what digital assets would be without custody, without a concept of storage, a concept of a means of verifying ownership, and the rules that govern it. So custody for me is a foundation of digital asset. When you don't have custody, you can't trade, like how people are buying Bitcoins. You can't take your coins or your asset, put them somewhere to generate some form of interest. Also, digital asset is not the same as traditional finance, in a sense that here we're not talking about clearing houses. When bad things happen, for example, there's no recourse, you can't reverse transactions like we do in traditional finance. And I see custody as the battlefield of trust, innovation, and sovereignty. Notwithstanding, there are risks. There are technological risks, and it happens in different. Whenever there's digital technology, then you're looking at security risk and all kinds of risks like hacks. And the data says that over the past, from 2011 to date, we've lost more than 9.8 billion when it comes to digital assets.
Hello, Dari, hold on, please. Dari, you're moving the slides, but they are not showing.
Oh, they're not showing?
Yeah.
Just a minute.
Okay. Wow.
Are they showing now?
Just the first page is showing, but I think you've gone past that one.
My title slide is not showing.
The title slide is
Are they
showing.
moving? It's not moving.
It's not moving. Yeah.
Oh, that's not good. Let me just try and start the presentation. Let me just try and start it again. Yeah.
Right. Okay. Whilst we wait for Dari to do that, I did mention if you applied for the pitching, please move out and see Peter, and then we'll get your set ready. And again, the cocktail networking setup is done. It's actually done. I looked at the number here, fewer the merrier. But please don't go. This one, we're going to have, it's a whole blockchain out there. We all need to just take our own. So please don't rush out. Don't be in a hurry to go, because it's purposely meant for you as well. So don't be in a hurry to go. We're going to have a wonderful time. Daria, are you back?
Can you see my screen?
I can see your title screen now.
Can you see, is it moving now?
No.
Has it moved?
No yet.
Still not moving?
It's still not moving.
That's interesting.
Yeah.
I might have to change the way I'm sharing the screen. That's interesting.
It's not moving.
Oh, it's not moving.
Yeah.
Okay.
That's like an example someone gave yesterday. They subscribed to a crypto platform, and after some few days, it was gone.
Is it moving now? Like, what I see in the risk and fault lines slide?
Yeah, they are. Yeah, we are seeing that one. We are exactly at that side.
Okay,
yes,
good.
Yeah.
So I was saying that in spite of, when it comes to digital asset, when it comes to anything digitalization or digital technology, there are inherent risks. And like I mentioned, we've lost over 9.8 billion, and I'm sure more, due to all kinds of different cybersecurity or digital risk activities like hacks, malware, phishing. In 2022 alone, it is estimated we lost over 3 billion, and there are different dynamics. Sometimes the whole asset base is lost due to human errors as well. Sometimes you lose your private keys, and it's happened to me where I have assets where I don't know where I put my key, because maybe I bought that, I interacted with that digital asset several years ago, and now I can't even access it because I can't find my private key, or I've forgotten my address. I've made mistakes. I've transferred money to the wrong person, to the wrong address. And then there are also collision issues. We have regulatory risk, KYC, travel rule obligations that is driven by the Financial Action Task Force. We have institutional risks, weak custody standards, lack of capacity, insurance gaps, fragile operational resilience. So these are some of the risks that come with having digital asset. Now, what the other dimension I see is also that tug of war between innovation versus regulation. So you realize that innovators always are quick to move. They want decentralization. We are thinking about speed. Like innovators typically don't want any hurdles. They don't want any boundaries. They want that freedom to be able to be creative and create product, create services, take technology to the next frontier. Then we have the regulators who are safeguarding realities and context. They're safeguarding customers. They want more control. So we have the KYC requirement, anti-money laundering requirement. They want to surveil all transactions in the name of ensuring that there's integrity and sanity in any ecosystem. And we see that these two people, a lot of the time, is like the light poles of a magnet. They are not able to attract. So if you do magnetism, it's a light poles repel, unlike poles attract, and that is kind of the situation that we find ourselves. So what we see because of this tug of war is that adoption is slow. We have fragmented transactions or ecosystem activities, and then you realize that this whole digital asset dynamic becomes sometimes a hobbyist or elitist thing for a few people. It's not mainstream, right? And that's something that we want to be able to move past and make digital asset acquisition or the digital asset dynamic a lot more mainstream, so that no one is excluded in participating in the digital asset ecosystem. So the key question then is, what can we do? We've seen the risk, the tug of war, and how do we go past it, right? I believe that custody must evolve from just storing into what I see as a strategic infrastructure. That means that we need institutional grade solutions that have compliance built in from day one. And I believe that in Africa, this is very important, because if custody is weak, the entire financial stack built on top of it would collapse. And then also, I think that we need to have trading reinvention, where blockchain allows us to move from T+1, T+2 to near instant clearing. We want to be able to reduce the risk with counterparties and with custody rules. And I also see that we need to be able to evolve our compliance. We need to be more context responsive and not necessarily adopt everything that we see. And when I say context responsive, I believe that every jurisdiction should understand what their peculiar needs are, what their customer behavior is, what their realities are, and then set their regulations, set their compliance to fit their realities, as opposed to say, okay, this is what the whole of West Africa is doing, so let's all do the same thing. I believe that we need to have our own sovereign layers, sovereign compliance layers that taps into other global layers, as opposed to adopt global layers, hook, line, and sinker. So that's how I see the evolution of compliance, because a lot of the times we like to adopt wholesale what the rest of the world is doing, without necessarily looking at what our realities are, who our people are, where are they living, what are their geographies, what are their demographies, what's our infrastructure like. And because we are not a lot of time context driven, we tend to always disenfranchise a large pool of our people from technological advancement or from new trends that should ideally support a whole ecosystem. And for me, I believe that we need to be more context responsive when it comes to any consideration, especially in the areas of security. I'm also we need to embed some of the regulatory requirement into the blockchains that we are talking about, and then also we need to see a shift that custody is not a passive thing, but it becomes an active governance plus trust layer. So you're blending both the regulation and the innovation together, and it becomes more an enabler of compliance and scalable innovation, as opposed to two different things. How do we bring traditional finance models into decentralized finance? And I believe that it's we can do that within the architecture. So what does transformation look like in the blockchain space? I see efficient market that if we're able to transform, we're going to have lower friction in capital market, more liquidity through tokenization. That means that people can participate in fractional or fractions of typical asset. You don't have to own everything. You can own a piece of the pie. When that happens, that means more people, the ordinary person, can participate in the digital economy. I see safer integration of, like I mentioned earlier, decentralized finance and traditional finance. So experiments in tokenized equities and bonds already underway globally, showing proof of liquidity and faster settlement. In the future, we are looking at regional African stock market running on blockchain after Africa Container Free Trade Area, enabling cross-border access and retail participation via mobile first platforms. Like I said, this, for example, something like this should not be done like Ghana adopting a wholesale framework from the top, but Ghana having its own sovereign layer and tapping into the global protocol or the after protocol. What I also see is that when we transform our blockchain ecosystem, we'll also see more trusted compliance. And the more people trust an ecosystem, the more they participate, the more you see adoption. So we are looking at automated reporting, so regulatory friction is reduced. Cross-border transactions that are also regulatory friendly, because a lot of the time we don't move because regulators don't have a full grip of an ecosystem or of a new trend. So they rather become sure before they move forward. But when we're able to embed, we're able to transform with blockchain, we then can see more trusted compliance. Regulators become more flexible in how they deal. So standardization builds confidence for institutions' adoption. And what we see, the jurisdictions what we're aligning with the Financial Action Task Force, travel rule standards, embedding compliance in custody solution. In future we can see from an after perspective, custody and compliance protocol could reduce the cost of remittances and ensure smoother intra-African trade with automated on-chain regulatory checks. And for me, that is very, very critical. Then we have global value chains, where you can track provenance in food, pharma, and ESG, where you can track how goods are moving across any value chain. So when you pick your cocoa, you know how you can trace them till from the farm to the port or from the farm to the factory in Switzerland. It helps deal with issues around child labor. and it also can help reduce issues around rejections because all these compliance are already embedded at source while the trade is going on. So we now see global pilots in agriculture, pharmaceuticals, mining, using blockchain to ensure provenance and anti-fraud. So what does the future landscape look like? For me, I see the revolution around more productization, building more use cases, evolving more use cases, innovating a lot more, building more product, bringing real world situations into the blockchain platform. So for example, building more consumer apps, bringing a lot more wallets onto the blockchain freight, fiat, crypto, loyalty, NFTs, bill payment, remittances, savings, bringing them into the blockchain fold. Also looking at the enterprise product, blockchain embedded in business flows, like I mentioned, supply chain provenance and digital twins, central bank digital currency. Now a lot of us we are talking about decarbonization, so carbon market linked to blockchains. Also, capital market, very, very big deal. Having all financial instrument, bonds, equities, all of them on blockchains. I believe that when we build these real world situations and onboard them onto the blockchain platform, we're going to see a lot more adoption. And for me, that is very critical for us to see that transformation, for us to see blockchain become a mainstream activity in there. I also see public infrastructure and government services as key driver of blockchain adoption. And I believe that when we think of the future of custody, it's not just about, like I said, private product and services and use cases, but government themselves can be mega users. And globally, governments have been key major adopters of any technology. For technology to explode, government have to adopt it at mass. And I believe that government is where we can drive this. So we're looking at welfare and social protection delivered through tokenized subsidies, pensions. So instead of leakages in cash transfers, every citizen could receive benefit directly into secure wallet, auditable and traceable, land and property registries across Africa. We can deal with land dispute. I know that's a big deal in our parts of the world. We can look at civil identity systems. Already Ghana has the Ghana card. That's another layer that we can put there. So birth certificate, passport, digital IDs. So if all these are secured on these custody rails, then we can create the trust foundation for every other service from healthcare to voting. And that's how, for me, I see the blockchain transformation moving. So for me, I have questions around mainstreaming custody. How do we mainstream custody? How do we move from holding asset to fueling adoption? So is it private innovation that creates the product that need custody? So get more private sector participation. Because currently it's a buzzword. The key question, how do we move it from a buzzword to reality, to an economy? Is it public infrastructure creating the trust rails for mass scale adoption? So these are questions that I'll leave to the audience. How are we evolving? So I see AI as key enhancer, where AI doesn't just detect fraud, but predicts it before it happens. I see decentralized finance integration, where custody rails enable safe institutional access to decentralized market. I also see the tokenization of everything, where real estate, bonds, carbon credits are brought on chain. So you can have the piece of any real estate. You don't have to have it all. You don't have to have hundreds of thousands of cedis or dollars. You can just have a small part, a piece of it with how much, whichever amount that you have. I see regulatory divergence where countries attract innovation because of how they evolve around blockchain. And for Africa, I see the Africa Continental Free Trade Area play a historic role, creating harmonized custody and compliance rails that will attract capital and innovation at scale. What lies ahead? I see custody of intangibles, where you have your reputation. So it goes beyond money. You're talking about your reputation, your credentials, having your AI twin, being able to do things for you. But of course, you need to make sure that you can prove that it is actually you. So I see custody becoming more autonomous, governed by artificial intelligence protocols that enforce trust without humans. As now we are going to space, we have a lot of SpaceX, different private companies going to space, and I see custody becoming more interplanetary. So we are talking about mining in space. How do we secure these assets? So the right satellite bandwidth, off-world commerce, so commerce that is not on Earth, that's beyond the Earth. I see that as well happening. And at a geopolitical level, I see custody will become a new weapon of sovereignty, where nations control digital flows the way they once controlled oceans. And I believe that is where we must prepare. Because custody is not just storage. I see custody as the new frontier of civilization. And that's something that I believe that we need to start tapping into. These are conversations that I believe we need to be having. What I see is that a lot of the time when there are new trends, when there are new technologies, Africa always plays catch up. We always are lagging. The question is, how do we now be at the front of the conversation? And I believe that we need to mainstream it, get good big public infrastructure to drive custody, and then start now navigating the new conversation, having the big conversations, beyond what we currently see. We need to build a whole new culture of thinking multiple steps ahead of ourselves as a continent, and not always play laggards, not always play the ones cap in hand, begging for funds to implement or think through things. So what does it boil down to? I believe product innovation is critical. Consumer apps, enterprise product, capital market tools can spark new demands for custody. We need to see custody as an infrastructure and move it from individuals. We need to have national custody rails, trusted, compliant, resilient, very important, because for me, governments actually are big drivers of technology adoption, mass adoption, everyday wallet, cross-border payment, tokenized trade corridors that are critical. And like I said in the beginning, context is everything. Whilst we pursue transformation, let us not forget that we need to know ourselves. So, man, know thyself. How do we build this new? How do we transform custody from a point of view of who we are and what we aspire to be, and not necessarily just wholesale adopting what has been done before? Thank you very much. Yeah, so I'm done with my presentation, and I appreciate the opportunity to engage you. Thank you very much.
Right, thank you so much, Jerry. Good seeing you, and good having your presentation here. Another round of applause for Diary. Okay. I think by now you should be tired a little bit. If you agree with me, just give me a wave now. Oh, you are. So kindly be on your feet a bit. Just respectfully gesture. And then probably just walk to two people and say hello to them and come back to your seats. Yeah. I now feel it now. Oh, good. Uh-huh. I now feel it. Okay. What's that? No. All right. Okay. Give it to me. Okay. Respectfully, kindly take your seats. That's good. Aish. Nice one. I'm announcing it again. There's going to be a cocktail networking section right after today's session. So please don't be in a hurry to go to leave here. No, don't do that. We have a few sections to go. Next is going to be a fireside chat. And I want to bring them on stage so that we do it quickly. It's going to be snappy. No two ways about that. And we're going to look at beyond boom and bust, building sustainable and profitable digital assets business. We want it to be a kind of fireside chat so that you can easily follow through with it. So I want to invite here my own queen. Our queen for our panel earlier on yesterday. Mimi, join me on stage here. Let's give a round of applause, yeah? And then Eben. Where's Eben? That's my big brother. Eben, join me on stage and let's have this conversation as quickly as possible, but just bringing us the nuggets. Right. So over to you, Mimi, and then Eben.
Thank you. Good afternoon, everyone. I will let Eben introduce himself to start us off.
All right, my name is Eben. I head a company called WeWa. What we do is we help businesses with cross-border payment, and we are built on stablecoin infrastructure.
Perfect. So let's jump in. I think everyone will agree with me when I say digital assets are not just about technology. There's a lot of underpinning businesses which have to be run in order to sustain the blockchain and the availability and access of, the tokens and the coins and the like. But I think the key question really that we need to ask ourselves is how do market cycles affect these businesses? How do regulatory shifts affect these businesses? How do these businesses look at changing customer needs? So today's conversation will really be about resilience. What makes some firms endure and what makes others fade? So let's jump right in. Since the advent of crypto, we've had crypto winters, we've had bull runs, we've seen businesses rise and fall with the tide for various reasons. But what actually separates those who build for the long run from those who disappear with the cycle? Eben, so I'd like for you to just tell us a bit about what you think, what qualities separate digital asset businesses that endure from those that fall after market cycles.
I think it's not just a crypto thing, it's not just a digital asset thing, it's a general business thing, which means that for every business, you have to, before you start out, you have to know, for a business to succeed, there's different factors that play a role. One is the amount of capital you have starting, because as we may like it or not, but it's capital that keeps the business running. Then there's also the timing of the business. So your capital can come from two forms, which is your startup capital that you are injecting into a business or a customer paying you for the service. So then you recycle the inflows that you're getting from customers. Now, what makes cycles happen, the booms and the busts, is you can be in a business sector where there's a good cycle where you have a lot of money coming in, but then when it goes down into the bust section, there's no money coming in, so the business cannot stay afloat. So then it goes back to, does the business principles, is it sustainable or is it a hype? If it's a hype, then when that hype goes away, there's no business for you again. So it goes back to people building businesses or thinking through what kind of business they want to go and build. We've seen in this digital asset space where some companies came, they had a hype. When the hype went down, instead of them dying, they were still able to sustainably build in the background. And once they reached a point where it became a good market again, everyone comes. For example, using the company we run, we started our business. The entity was set up in 2020. Operations started 2021. 2022, we started scaling the business. But up to this point, there has not been a clarity around stable currency. Now we are in the market where everyone's talking about stable currency. So now, because we built on the principles of let's grow sustainably, we didn't go, okay, 2022, there was a high market, so let's just go do the fancy things everyone is doing. But it's about pacing yourself and building a business the right way.
That's right, so that it's sustainable. So you've adapted yourself to the various market cycles to ensure that you survive. Great. Now, let's move on to the next question. How can digital asset businesses in Africa leverage local cultural and economic context to create unique value propositions that differentiate them in global markets? As we know, crypto is global, but of course, I think as a continent, we've got to think of how we can sort of tailor that to suit our needs. So
I think in terms of digital asset, for me, what I tend to do things is model the playbook that works. And what better industry do you look at than the banks in Africa? Because banks in Africa are different from banks in the West. Let me give an example. I was speaking to one bank in the UAE space, and where they make money from is mostly lending, consumer lending, a lot of other products that if you come to African banks, that's not where they are making the money from. So you have to look at, okay, you are going to a broad space of digital assets. It's a broad market. It's a global thing. Which other industries have similarities to what you are playing in? You can be in digital assets and you're playing the, say, blockchain fundamental layer of doing something for institutions. Look at the big institutions. How is, for example, if you're doing something that is competing with, let's say, how big global businesses like Microsoft is selling to African businesses. How are they selling to African businesses? So then you tailor your product to adjacent industries and what they are doing. I tend to meet people and they feel like, oh, digital assets is a whole new thing, so I won't regard what other people are doing or what other industries are doing. But fundamentally, you are speaking to the same people, or say I'm going to sell to a bank and I'm saying things that are different from what Huawei and all the other big guys who are selling to them currently is saying. I won't get a business. Mm-hmm. So you have to tailor it to what other people or other companies who are selling to them currently are doing.
And what would you say at WeWire really differentiates you from a global perspective? Like, what are you doing locally that really sets you apart from the global scene?
So it's about understanding the local business context. So we currently operate both on the local level and the global scene, because currently the licenses that we are operating with are not local licenses, are international licenses. So it's about going there and letting the bankers we are working with understand that from the perspective of Africans, okay, for example, to be able to onboard a business, you need certain things, documentation that you have to show the bank that you've done the DD on them. Some of the documentation questions they are asking for doesn't exist in our context. So for example, I'm speaking to a bank and a bank is asking me, oh, provide us zip code for the business or the director of the business. We don't have zip codes. So then let you understand that, okay, why are you asking for a zip code? And then trying to get understanding of why you need that. And I say, okay, I can give you this alternative. Who solves the problem, fundamental problem of I want to locate my customer? So then I show you that we are able to locate these customers. You leveraging, working with us de-risks you, because we're able to package the customers in a way that you're able to work with. So that's what we've been doing.
Yeah, I would agree with that. I mean, if you look at the likes of Mika as a blueprint, their capital requirements might be quite punitive for local players if we were to adopt that same framework for the local players in Africa. So by tailoring it to the local context, I think it'll be a big win for us in sort of moving forward. Great. Okay, so let's move on to sustainability. What sustainable business models are best suited for Africa's digital market? Now, let's put the spotlight on Africa. This market has unique needs, from remittances and FX gaps to mobile money and underbanked populations. Which business models do you believe are not just profitable, but truly sustainable for Africa? Is there a model that works beautifully here, but you think would fail in Europe or the US and vice versa?
The short answer is there are several models that work beautifully here, but I think most builders that we see tend to follow the West by building the fancy things that the West are building. But practicality, for me, the first thing is who is going to pay for the service you are offering or the solution you're bringing to the market. Once you understand who is going to pay for it, what's their pocket size, and let that lead the design process or the solution you're building. Once you're able to do that, it makes it easy to know what to build from day one and what not to build. Sometimes you get certain, internally our team, maybe we are ideating, they bringing out some fancy ideas. I'm like, yeah, it's fancy, but is the customer you're going to give that solution to care about that? We, again, look at other industries in the African context. Who are the industries that are making money on the content? They might not be the ones with the fancy solutions. They might not be the ones with the fancy app. Yes, we build UX to improve user experience, using our product, but don't take it to the notch where you are overly indexing on the UX and not the the product itself or the solution that the customer wants. So we have to balance it too.
Yeah, I would agree. I mean, it's similar to Momo, I guess. I don't think Momo would really work in the US or Europe because it's a very mature market. And
yeah, even with stable currencies, for a very long time, the US market didn't understand stable currencies because the question to them was, the banking infrastructure works fine. Why will I need a digital dollar? But the adoptance of stable currency was not happening there. It was happening in third world markets, Latam, Africa, and the rest. So again, I was listening to one podcast about the Tether, which is behind the most popular stable currency called USDT. For them, they realized that the current USDT that they have in the market will not be adopted in the US market. So now they're looking at, okay, how do we enter the US market with a product that suits that market? It's the same thing we should also be adopting in our context. Is that what works here and how do we build products that fit into that? I can't tell you the solutions to that because I am building it. So if you want to know or if you want to win in that space, come build with us.
Perfect. So we'll sort of try and wrap it up now. How do you balance short-term profitability with long-term ecosystem growth? I think you would agree this is the tension every founder feels. Investors want returns now, regulators want stability, communities want access and inclusion. So how do you walk the tightrope between hitting short-term numbers and investing in the long-term health of the ecosystem? Should firms sacrifice early profits to seed growth, or do they need a war chest first before they can think beyond themselves?
I think you need a war chest first. The reason is, it's just like you telling someone that, oh, come to work, but I won't pay you, but you just come to work and work with, you don't have anything in your pocket. Just come. It will be.
Actually, some startups do.
Yeah, but at some point, the person will stop giving their best because a hungry stomach cannot think well.
Yeah.
So it's the same thing for businesses. If you realize the businesses that have even weathered the booms and the busts, most of them built a large war chest during the booms. So then when the bust had happened, they had cash flow that sustained them through those bust periods now. So it's always best to build a war chest. So it's either you are building a war chest by saving up to start your business, or if you are lucky, one of the few lucky ones that can raise money on ideas, go raise the money on ideas. Yeah. But if you are
Yes,
not,
it's
maybe you
popular
might
in
work
Silicon
somewhere.
Valley, but perhaps not for us.
To me, it doesn't work in this market, but yeah,
Yeah.
if it works for you, kudos. If you have a rich uncle, maybe.
Even better. Okay. So that's all we have time for. But I think before we go, we have some time for some quick honesty bombs. I just want you to say some closing remarks. One thing digital assets in Africa should stop doing, and one thing they should double down on.
Stop building like the West.
But are we?
Yeah. A lot.
Mm.
A lot. So you see a lot of solutions like, oh, we are trying to do Silicon Valley thing for Africa, this thing for this thing. It doesn't really work. If you are doing, for me, I would rather tell you, build for that market from here than try to copy what they are doing into this market.
Yeah.
It doesn't really work.
And one thing we should double down on in Africa.
The basics.
Which are?
Look for products that work and build for that basis. Right now, like I sit down and do studies into like the basics that work in this FMCGs. Like if you want to build for the mass market, you're looking at like FMCGs. You're looking at most of these mass products. How do you build to tap into those markets, or how do you build for the businesses or the high net worth individuals? You just pick a market that you know the consumers can be able to pay for the solution. There's this headline I saw recently, someone in Silicon Valley charging $30,000 to name people. I'm sure someone will see that headline like, okay, there's a business idea. Let me also start in Ghana charging people. But the question is, you bring it to that solution. It's a good idea. You're charging people to name people in one market. It works perfectly. But you come here and say, Ghana, everyone has a name. The day you are born is your name. So why would someone pay you 30,000 or whatever amount?
Also, we have more pressing issues.
Exactly.
Great. Thank you so much, Eben. I think what I'm hearing across from you is that endurance in digital assets isn't about chasing the hype, really. It's about discipline, adaptability, and building with Africa's realities in mind. That's how we not only survive the cycles, but we shape the future. If digital assets had commandments, I think resilience would be one of them. Thank you so much, Eben.
Thank you.
Thanks.
Let Peter join them. Let's give them a round of applause as they take the picture. Thank you very much. Mimi, I don't think you are going. I think you are still on stage. I'm not sure you go now. Okay, and then I also want to invite on stage Jill. Jill, please join me on stage here. Okay. So we're going to do something simple and short here. So now you're going to keep the time for me because I'm joining them on the panel. So if you don't keep the time for me, I don't know when we're going to close. All right, it's going to be a quick one. It's going to be a very, very quick one. We're going to look at the future of money on chain. We are looking at stable coins coexisting with tokenized deposits. So we've not heard from you, Jill. I have not heard from you the whole day. So I want to give you the opportunity to give us a brief about yourself. Let's know who Jill is and whatever you want to add to it.
Well, we don't have much time, as you mentioned. So I'd rather not take too much time to speak about myself, but I will introduce myself for everyone that's joining us on day 2. My name is Jill Lagos-Shemin, and I'm the head of policy at Fintech, which I believe you've heard about today. We are a provider of modern central banking and regulatory solutions.
Okay, so that's brief. Mimi, you just saw her, so I don't need her to say any other thing. So, when we talked about, I want you to try and break this thing for me in the barest level. Tokenized deposits and stable coins. I want you to start with that one. From that angle, then we can now zoom in, because I don't want it to look like it's a buzzword, because now everybody's chasing it, and I mean, more institutions or individually we are going on to digital payments and stuff. So this is a good chance for us to know what tokenized deposits are, as well as stable coins.
Okay. Well, as you say that, I don't know how many people are asking ChatGPT that question, and I'll be judged against what I say versus ChatGPT says. But what I really want to start with tokenized deposits, especially because I think we have a lot of bankers in the room today. And if you believe the future is on chain, your balance sheet should be on chain too. That was a quote that I heard recently. I wish I could take credit. And that is essentially what a tokenized deposit is. It is tokenizing a bank's balance sheet, a commercial bank, not a central bank. So in a lot of ways, in truth, today, a regulated, registered commercial bank can tokenize their deposits, can put them on chain. They could build the tokenization technology themselves. Please don't, totally unnecessary. They can work with a third-party provider and tokenize your balance sheet. And there are enormous benefits for doing that. A stablecoin is not that. Stablecoin is issued money on a blockchain that is pegged one-to-one to a fiat currency. And it is backed by high-quality liquid assets. Now, depending on what market you are in, what fiat currency you peg your stablecoin to, the definition of a high-quality liquid asset, the definition is the same. What counts as a high-quality liquid asset may differ. Mostly, it's considered commercial bank cash or short-term treasury bills, and also, I think, repo. But repo is not really a word at the base level, so I'm going to stop there.
All right, so Mimi, with this distinction done, which of these do you think it has a strong force to be adopted in Africa?
Obviously, stablecoins.
Let's hear this.
I think, the obvious answer is stablecoins. Just given the challenges and some of the problems that we're all looking to solve for in Africa, the natural choice would be stablecoins. For FX fluctuations, sticky inflation. It's just an everyday hedge for your typical African who lives on the continent. So I would say that I think we, or at least the banks in Africa, are a little bit of a way off from tokenized deposits. I mean, there's some infrastructure that would probably need to be in place, but as Jill said, it's probably best banks don't build this infrastructure themselves and they partner with a third-party fintech. But of course, if the banks did want to build this infrastructure themselves, they could do, and then they would then flip from a very passive custodian position to actively building the infrastructure themselves. But I think it's something that will definitely make sense. I think tokenized deposits will allow for banks to be custodians, which inevitably puts the trust in the hands of the banks. There've been a few exchanges which have gone bust or disappeared, and I think if the banks can be custodians of some of these digital assets, it really puts that trust with with the banks. And I think that could also help with the adoption of the likes of the e-city, the e-naira, CBDCs, and things like that, because I know there's a company in Europe where you can, your bank card is linked to your crypto wallet or your digital assets wallet. And I think, even for the older generation, that just instills a lot of trust with it for digital assets. So I think that's something we need to consider. And I'm sure a lot of the central banks across the continent are thinking of that. So I think the best way really would be, the quickest way perhaps would be to partner with third-party fintechs to facilitate that. But ultimately, I think stablecoin is king when it comes to thinking about Africa.
On you, yesterday you made mention about we having this number of currencies in Africa. Now, with this in place, what are some of the changes we should expect having cross-border payments and settlements? I mean, you made mention of the ECD, Naira, and all those stuff. What are the changes we should expect?
I think in terms of sort of cross-border payments, is that for tokenized deposits, or so for tokenized deposits? I guess it would effectively eliminate the need for SWIFT. So the banks can interact directly with themselves. There wouldn't be a need for costly SWIFT transactions. So I think that's kind of the way the business model will change for banks.
Do you mind if I add something?
Yeah, jump in.
So I think that it's really important to mention some of the benefits of tokenized deposits for banks before talking more broadly about this comparison, tokenized deposits and stablecoins. Tokenized deposits can provide an enormous amount of efficiencies for banks, commercial banks in Africa. That has to do with managing settlement and also for accounting, for other things too, but for the sake of brevity, let me focus on those two. Anytime commercial banks talk about risk management, managing settlement risk, managing a correspondent banking risk, third-party risk, that means money. That means liquidity that is tied up in that risk management. So if you can eliminate, or at least heavily reduce, but eliminate that risk management, which can be done with tokenized deposits, you are freeing up a lot of liquidity for that commercial bank to then utilize. I think one other thing I wanted to mention is about the use case of tokenized deposits for a regional or continental African bank, which there are a number of, right? And that's where I see a major use case for tokenized deposits. Should the Echo Bank or the Stanbic Bank or the Standard Chartered Bank decide to tokenize deposits, that can really change in a, I don't want to say fantastic way, that sounds overly enthusiastic, but an extremely meaningful way, how they can move money and manage money for their own banking structure.
So bringing it from where you just ended, will the African Commercial Bank tokenize deposits? And if they will, are they ready to do it now? And if they are not ready to do it now, what is holding them from doing it now?
So that's actually not a question for me. That's really a question for the folks from the the industry group of chartered banking institutions of Ghana.
Oh, okay.
That's the
Ghana
question for them. They're welcome to come talk to me if they're interested in doing that. But I hear what Mimi says in terms of the adoption in terms of sheer numbers, stable coins versus tokenized deposits. It really shouldn't be a versus. They provide their functions are different, and they provide different services to different players in the market. The only player in the market that can tokenize a deposit is a bank. And that bank can use that tokenized deposits in different ways, mainly internally, but also it can be I'll call it a product that allows it to interact with the crypto ecosystem and virtual asset service providers much more seamlessly. So what Mimi was talking about, some of the opportunities in providing custody services or banking crypto providers, having tokenized deposits as something they do, it will be a great facility for that financial relationship, or that financial interaction. I think that in terms of overall growth, we will see more stable coins just because of the service that they provide.
Yeah, I think it's they'll just complement each other. I don't think it's one versus the other. I just think for Africa, the need for stable coin is just more urgent than tokenized deposits. But I think eventually we will get there where deposits will be tokenized and the banks will have to actively participate in the infrastructure for blockchain and, custody and all of that. So I think, banks are probably already thinking about that. But yeah, I don't think it's one versus the other. It's just when. It's a matter of when it happens.
So they are coexisting.
Yes.
Okay, if
Yes.
that's what you say, we'll go by that one. We don't have a problem. But then, how will their growth reshape business models? Because how will the growth of this reshape business models if they're coexisting? How are they going to reshape the business models in the different landscapes?
I think it'll just be a matter of quicker settlement, and it will be a reduction in transaction fees from a stablecoin perspective. At the moment, you're paying 7 to 10% or something like that on remittances.
True.
So that will obviously be lowered. Tokenized deposits in the same breath will eliminate the need for, SWIFT, which can be costly, and the time lag is days. So I think similarly, it'll be more efficient, it'll be more cost effective, and that's how it'll really change the business model. And inevitably, it'll change the mix of, assets on the balance sheet for banks as well, because then they'll have these tokenized deposits on there.
Okay.
Yeah, I hope that we come back next year and we are asked the same question, because I think we will have much more robust answers. To be very frank, the business model for stable coins, we know it, it's very clear. How many stablecoin providers can exist in the market successfully and profitably? We don't know that at all. There's going to be a certain level of fragmentation of stablecoin providers, issuers in the market, and that is a necessary evolution of a nascent market. And as the stablecoin market matures globally, there will be convergence. That's a sign of how markets mature. What I would like to say, this isn't an answer so much, but I really hope we can speak to it at a later date, is the business model for stablecoins, different stablecoin currencies, I think will be different. So there is a certain marginal advantage, marginal benefit that stablecoins provide to consumers in emerging markets, especially African consumers, that Mimi has highlighted really well, that there's probably room for that margin to become more competitive. And that will lead to definitely some strong initial growth. How long that growth lasts or whether that growth moderates, we will have to see. That business model will be different than a euro-backed stablecoin, certainly a USD-backed stablecoin, Australian dollar-backed stablecoin.
Yeah, just to echo what Jill has said, if we ever get into the realms of creating our own African stablecoins, it'll be interesting to see how that works and how it changes, the business models across the board.
I want to go the practical way. You just said if we're able to create our own stable coin. So let's take it like we have our own stable coin.
Yeah.
How am I going to benefit if I'm moving around other countries in Africa?
Who's the we? When you say we?
Okay, me.
So you as
an individual.
A consumer. Okay. Not regulator or
No,
central bank.
No. Me as a consumer.
If I'm being very visionary, it would be great if we all had one currency as a continent.
Okay.
Just kind of echoing Kwame Nkrumah's sentiment. But I think we're a long way off that. But, if we had a few simple stable coins that everyone used, I think it would just make trade a lot easier. It would just unify the continent even more.
Okay, because this is it. I sit in Ghana, want to purchase something in Kenya. It's only one option. I have to convert my CD into US dollar to purchase all the way in Kenya. Whereas, I mean, I could have easily done with this one. So I think going forward, that should help. That should help. All right, Joe, your final words for me. You're going to come back again, so don't worry. Give me your final words because you've not spoken that much. So I just want you to get your final words, and then probably I'll take about a question or two from my people. So, all right. So wrap it up in such a way that they wouldn't have any cause to ask a question.
What do you think I should be speaking to that is most important, most exciting? Do you want me to tell them what stablecoin they should buy stock in? Because I won't.
So which one do you want to do?
I mean, I think that per usual, I would say it's if you're a builder out there, it's going to be very valuable for you, a virtual asset service provider builder in Ghana. It's going to be very valuable for you to learn as much as you can about how banks manage their own risk and how they manage their own liquidity. I heard this great quote yesterday or earlier today that if you want to be in the business of accelerating liquidity and providing more liquidity, learn how that has been done for a long time. That's also going to be important because you, as the virtual asset service provider, you're going to need to bank with a local bank. So start learning about that now. The other side, I would say, for commercial banks is absolutely think about what tokenization will mean, what it will bring to your business, and get ready to play a role in that. If you determine that role is going to be a backer of stablecoins is best for you. If you determine that role is being a custody provider, if you determine that role is being a leader in tokenization of finance, what is your pathway there? Does it start with tokenized deposits? Does it start with something else? But part of the reason I know you had this panel on the agenda is because you and everyone at the DASA committee and us here, we know that finance is coming on chain and it's bringing traditional finance with it.
Mimi, final words for us.
Sure. I think I'm going to circle back to my point about access, because I think that really just accelerates the adoption of any digital asset. So be it stablecoins, be it tokenized deposits. I think for myself, that runs or operates a digital assets exchange platform, the key is really to be able to provide the necessary on-ramp and off-ramp rails. So it's easy for people to, transfer their Momo onto an account and buy these stable coins, and equally off-ramp into the local currency, be it Ghana cedis, Naira, the Kenyan shilling, whatever it is. So I think for me, that's still key. Yeah.
All right, that's still key for them. A round of applause for these wonderful ladies here sharing with us the future of money on chain. What do you want to do now? You want us to take a picture? Okay. All right, so please get here so that you can sandwich me for the picture. Thank you very much. Okay. At this moment, we want to just give about 5 minutes chance for what DASA is doing. They're trying to help with startups, so startups can come up with what they're planning or what they're building, especially for innovators, and showcase it to the world. And then they have one person here to help us do that. Or Peter. All right, so let me get something from Peter, and then I can get back to you. Hold on. All right, so before he comes in, we have the QR code here. Please, we need feedback. We need feedback because we need to make it better and better each and every year. So please, if you could just give me some few minutes, kindly pull up your phone and then let's scan the QR code and then let's do the needful. Just fill it for us because we need your feedback. We're working with you, and without you getting us your feedback, it will be very, very difficult for us to move to the next level. So please, kindly pull up your phone, scan it. Let's get your response. Let's get a response because yes, we're good with a response on that way. So please, if you are done, I want to say thank you for that. Thank you for that. Thank you for that. Thank you for that. So whilst you scan it, I want to bring on board Abdullah. Abdullah is going to share with us. Hold on. The form is closed. The form is closed. What is happening to the form? Thank you. Please get the private key off. Let's use the public key so they can all open it. Right. So while they are getting you the key, let me bring on Abdullah. Abdullah come in and he's going to show us just just 5 minutes. He's going to present to us what he has for us. Let's give him a round of applause as he comes on stage. Please still don't go. Cocktail is out there.
Hi, everyone. Hi, everybody. Good to see you and good to be here. And thanks so much for all the organizers, especially Peter. So my name is Abdullah Bas Ahmed. I put together this pitch because there was a request, and I'm going to try to, meet the 5 minutes window. Basically, I am a businessman. I'm an investor, and I came up with an idea a couple of months ago called Sikasem. And it simply means money matters in the Accra Ashanti language. So what you are going to see is a pre-seed pitch that I'm doing to anybody that is interested in the product design and development, as well as the marketing aspect and what this will look like. Or on another hand, we can also discuss in terms of what I do and what your interest is, and then we can see how we can partner together. Next slide. So Sikasem is it's a digital accounting platform concept, pre-stage right now. It's not in development. It's just the design. And the first slide you see is the initial research I did in Africa in terms of the internet is going to move forwards. In terms of lack of connectivity, is always going to increase demand. And part of that demand is what we are seeing today, which is digital assets, cryptocurrency, and everything that idea, which is the Sikasem MVP. And everybody who's in the software industry knows an MVP can be something that solves just a simple problem. And so before you solve that problem, you also want to see the opportunity that you want to have. And so part of the solution is to make sure that once the platform is built as an MVP, we are going to have the IFRS standard incorporated in the platform. So in other words, when you pick your data, you can do your reconciliation, come up with everything that is required. Or you can use the gap, and these are all public knowledge. Any accountant knows a lot about that. And then when we talk about the CASEM solution, we're also looking at the Africa Free Trade Zone. So if you want to pay somebody in Kenya, I mean, there are a lot of tools that you can use to integrate APIs in the system to pay anybody in Kenya. And then you do your reconciliation from there. And live in the system, one of the solution is also going to incorporate live currency conversion. So you would know if you are paying 1,000 Ghana to somebody in Kenya, how much is that in dollars, for example? How much is that in pounds? Next slide. So I'm a user experience designer. Anytime I think about design, I think about the medium. So CASEM will have two flavors. The first flavor will be the web version, which is for SMEs. The second flavor will be the mobile version. With mobile, there's nothing much you can do. Basically, you are limited to how you can, utilize the system. So for that, it's going to be geared towards entrepreneurs that want simple reconciliation, simple accounting, payment, invoicing, and what have you, based on, again, local context, local standard, understanding our tax laws, understanding our requirements in order for us to build a product. Next slide. So here I put together a good friend of mine, Abubakar. He's going to be helping me a lot with accounting, because anytime you're going to invest in any product, you want to make sure you spend the money right. And that's me right there. And that's the interim team that I have right now. Next slide. So as with any product, I mean, a lot of QuickBooks is available. They have Sage, you have Built in Ghana. So as with any product, you want to look at what is it that the product it's doing that you can do better. So this is basically a simple slide that talks about the FX model. So Bank of Ghana, of course, has that data. You can incorporate it, you can program it in your own way so that when you are doing the currency conversion, you can have that model working. And then the next thing is the accounting and bookkeeping. Ghana has, all sorts of accounting standards. Again, the major one is the IFRS. We're going to study that to develop the MVP based on those standards. And we want to make sure that whatever we are building, it has a competitive advantage against any other system that we can find available. And then the use of AI. Everybody has seen crypto and how AI can automate systems. That's what the tool really is good at. What you can do maybe in 3 hours, AI can do for you in just a minute. We're going to incorporate that. Data analytics. The moment you enter into CASEM, you should be able to see your numbers, how much profit you have, who's going to pay you, who's not paying. You should be able to have that dashboard to analyze the data and to make business decisions as a startup or as an SME. And then project management. Everybody knows about risk. How much are you spending on projects? How can we incorporate that in the MVP to make sure that you manage your risks and your cost on projects? How can you also incorporate other project management managers based on the user roles that we are going to incorporate in the system? Next slide. So research has always been something very important for me, and this is just gives you the bullet points of anytime I come out with an idea. I like to look at the market. I like to look at what is it that others are doing. What can I do different? Because at the end of the day, it's what I do different that is going to differentiate whatever is in the market. So research and R&D goals for the product are going to be clear based on these modules, based on these specific goals that I set up. Next slide. And these are the key milestones. So around January was when we had the conversation. I was in London in my hotel, and I bought the domain name just to make sure I protect my IP. So these are so far what I have achieved. And this is specifically pre-seed pitch. Next slide. In terms of numbers, so as a solo entrepreneur, I've done a lot of projects, mostly on my own, but the company has been a startup, a vehicle for me to be able to raise capital, and this is what this is all about. So I myself have done a lot of works in the financial space, in the fintech space in the US, and here in Ghana, this is one of my key projects. And so these are the two companies. The top numbers are for the US company, which I started, and then the bottom one is for the Ghana company. I mean, I have financials for the Ghana company, but for the sake of this particular investor, anybody that's interested should be able to have access to that data to make an informed decision in terms of where your dollar is going to spend on this particular product. Next slide. So this is, as with any risks or any product you want to build, you want to have a budget. This is the basic budgeting that I put together in order to make an informed decisions. If we spend X amount of dollars, where are we going to spend it and how is that going to translate to MVP, marketing, and what have you. So this is just gives you a 1-year budget in terms of the build and testing of the product before we do a go-to-market strategy. Thank you. Next slide. So Sikasem is going to be subscription-based, as with most of the SaaS applications. It's going to be subscription-based based on the specific use case. An SME could have maybe different modules built in, and based on your subscription level, you would be able to pay for the product. So it's a SaaS application. There's a lot of cloud tools you can use for that, but security is always on my mind. So in terms of a business model, I envision this product to be a SaaS model as we see in the market. Next slide. This is just talks about a little bit about myself. That's me, and the immigration officer in New York City. I'm passionate about immigrants in New York City, and so this is an image of the officer. And I do hope that, you know, post-Trump, we're going to have a more robust immigration systems and support for all immigrants like myself that went to the US and come back in order for us to support our country. Next slide. So in terms of engagement, I have, you know, engaged with a couple of individuals I know at Gibbs. ACCA is one of the key organizations I go to when I'm looking for accountants. So I've engaged them in terms of, you know, building from their knowledge base to help make an informed decision in terms of the products from an accounting standpoint. And then the Bank of Ghana, of course, anytime you want to do any fintech application, you want to make sure you engage with them. So part of the spend will be to do all these engagements. And ICA Ghana has always been also a go-to place where I learn a lot about accounting, financials, the systems available in Ghana. So I have some individuals there that I talk to well. So this is very, very important because before you develop the products, you want to make sure that you create some kind of traction and relationships between those stakeholders. So that's what you have here. So next slide. So what's the ask? You can buy equity or you can invest. We can talk. I can discuss more specifics. But of course, as with any product, you want to make sure you protect the innovation so that other companies are not just going to take from your innovation and add it into their innovation. So as investors or individuals in the room, anybody can talk to me. I'm very open-minded. I can share more details, and then we can talk about what Newport has done in the past, what traction we have, and how you can invest, and how I'm going to make sure that your money is protected, and how we can all, you know, have a piece of the pie in the digital fintech economy. Next slide. Thank everybody, especially Peter and the organizers, and I hope to see everybody at the fireside chat. Thank you.
Thank you very much, Abdullah. So if you are a Ghanaian, you know this song very well. So the core Ghanaians got the whole rhythm. And I'm sure the rhythm is still playing in their heads now. Thank you so much. Right now, what we need to do, or what we are about to do, is to get someone that we're giving the last baton to finish the race. And to help us finish the race is someone who finds their self at the intersection of law, of technology, and of finance, which happens to be the pillars on which DASA is hanging on. And to be able to bring all the dots together from day one to today and let us go home with something we are proud of that we can speak to. It's no other person than this wonderful speaker who was here yesterday and was able to let us know that we have about 3 trillion. Was it cedis or dollars? Hanging on our mobile wallets. And for some of us, that was huge. And it's like, no wonder we have the bad people targeting the cyberspace. Because if we have this huge amount of money hanging in there, that's good news for them. And they are happy because now they have us all at the place they have always been wishing that we be, in the cyberspace. And now, for some good reason for them, we are all in the cyberspace. So with this amount of money hanging in there, good. They are happy to be there. So ladies and gentlemen, taking us home, having our last presentation for DASA 2025. At this time, you should see you start clapping. I see you start clapping. Don't do that. Okay, you don't need to clap now. You don't need to clap now. Now, the QR code is open. So before you clap, let's try it before we clap. Can we pull up our phones and can we scan it? And then let me know the response now, if it is closed or open. Oh wow. You are gone. Your asset has been accepted. Please, am I having any challenge? I think now it's good now. Yeah, we are good now. It even says it all by itself. Scan me, so scan it. Now, after you've done scanning, which has given you the go-ahead, help me welcome for the last time, taking us home from DASA 2025. Should be clapping now. Professor Toya M. Evans, take us home.
Excellent. Peter, sir, may I have the advancer? Calling Peter, or I will break out into a poem, I promise you. Oh. Hey, I was testing you. Okay, I was testing myself. Okay, let's bring this home. First of all, congratulate yourselves for your attention and your time. Please. You are the fearless warriors who are clearly invested in the future of Mother Ghana. And so it's an honor. It was an honor to open, and certainly an honor to bring all the pieces together as professors are wont to do. If you did not have an opportunity to scan my QR code from the keynote, know that in addition to what the access to the tools and the resources that I provided, there will be additional ones this evening that come from this presentation. So, and if you visited yesterday, please come back. I will leave that page up for about a week. So make sure that you access all of the free resources and the follow-ons if you want to go further in this process. So in the next 20 minutes or so, we are going to transform and kind of connect the dots and really think about what digital asset regulation really means. And I wanted to take a different approach to this session to really give concrete action items. It will be dynamic because everybody is working for a different institution or a different firm. You are a special type of stakeholder. So my prayer is that there is something in this for everyone as we bring everything into full view. And I also want to be clear that regulatory readiness, I have a program called Web3 Ready. And regulatory readiness, as I was reflecting on this, and some of this came up in some of the panels, there will never be a perfect solution. There will never be one moment in time where everything falls into place. So this is about building institutional capacity to ask the right questions, to identify the appropriate risks, to develop the proportionate responses as technology evolves, as citizens evolve, as businesses evolve, and obviously as the vast legislation evolves. But you're here because you're also responsible for some type of digital asset oversight, personally or professionally. So let's make sure that we are equipped to lead. So the first dimension, when I think about how to support you in assessing where you are, it's really important to, one, to understand the historical lens. Here we are today. We're going to be looking prospectively about the future, but we have to know where we are right now, yes? And so think about where you and your particular institution falls as I describe each one. The first one that you see here, technical competency. We have had no shortage of presentations, high level, in the weeds, and in between about technological competency. Can your team explain, as we saw demonstrated on the stage, can your team explain fundamentals to the average person, to the regulator, to whatever constituent is on the other side of the table? Do you understand the difference between payment tokens and stable coins and central bank digital currencies and tokenized assets? Can you identify decentralized protocols when you see one? Do you have access to blockchain analytic tools and, of course, cybersecurity tools? And I really want you to be honest with yourself right now. On a scale of 1 to 5, you don't have to share with me or the audience, but like right here and right here, where are you today? Because that will mean, that will outline the work that needs to be done to get you to where you want to be. The second dimension is regulatory infrastructure, and we see that in constant evolution right now. Do you have existing fintech supervision capabilities that you can build on within your institution? Can you coordinate across borders with other regulators? We talk not only about the interoperability of technology, but also among constituents and certainly among countries from a continental point of view. Can you, or do you have formal policies internally? Are you developing them? Are you setting up consultation mechanisms for your stakeholders? And what is the legal framework that you give statutory authority for digital asset oversight? Once again, 1 to 5, here and here, to start to identify where you need to go. Third is market intelligence. Can you map the digital asset ecosystem? Do you know the major players? We have seen almost every, dare I say, every major player that has a vested interest in the outcome here in this esteemed body. Do you know how the major players are thinking? I think we have better insight now. Can you assess consumer protection? Do you have formal mechanisms to engage with industry? 1 to 5, and most of you probably may hit between 2 to 4. I won't go into your heart or your mind, but you're actually right where you should be, because this is also very dynamic. And remember, there will be no one moment when you understand everything or have all of the pieces in place. And when I conduct this assessment, I've done this for Nigeria, I've done it for several states in the United States and other places around the world. And this is what I consistently find, and I want to share some of the common patterns that I see. You see them here on the screen now. The first is, the first is tech is usually the weakest. We've heard a lot of people say that the end user is the ultimate failure point, and I understand intellectually why we continue to hear that. I argue, and we did have someone present earlier, I think it was the ethical hacker. Is the ethical hacker still in the room? Okay. He laid it out. He laid it out for us to show all of the points that aren't necessarily user failure points, but extraordinary tech failure points that really, really can make the difference between the success of a project and the abject failure, to be sure. Think about when regulatory environments are kind of in between and it's difficult to figure out. Some of the anxiety of where Ghana is going is because everyone is waiting with bated breath to see the final outcome of what the regulation will actually be. Oops, sorry. Un momento, por favor. When you think about how the markets and the information and the data varies widely. We heard folks speaking about how one country on the continent might do something radically different and also not share information, and how challenging that is for banks and regulators who are trying to operate not only within country, but across borders for the benefit of Pan-Africanism. And also about the capacity of citizens and merchants to grow along with the technology and the regulation. That makes things very, very difficult if everybody is not moving forward together. And so we've heard quite a bit about Ghana's journey, the journey of regulation, going from perhaps very anti-crypto and then coming to the realization that this technology is here to stay, and you want to move with power, not as an afterthought. And so you think about the based ban versus the decision to regulate responsibly. I think that's a very powerful move, and to center Ghana primarily and first. And also this idea of phased licensing. We heard Carmel Cadet talk about, not necessarily in our fireside, but in a panel before, about the importance of sandbox regulation and having that environment to test things in an ethical way that will be the ultimate signal. That is how Ghana started to move forward, and why that's so incredibly powerful to do. And I argue that this is the blueprint. This is the blueprint. On the continent and around the world, as I mentioned in my keynote, others are taking note, and that's a powerful position to be in. You moved at first by necessity, and now you are moving forward with authority. And the progress will be in the details of how all of those things come together. And so I wanted to share 5 principles that I think that will also be really, really important to focus on as you continue to move forward. Proportional licensing, consumer protection, the sandbox model, joint coordination within Ghana and across borders, and its structured oversight that we heard regulators echo, and those at banking institutions as well, and something that will be extremely, extremely important. Let's take them each one at a time. The first principle means that not everyone gets the same treatment. Not every digital asset is the same. There are thousands of native coins and tokens that don't have their own blockchain but are built on other chains. There are different types that serve different purposes, and we're using software, which means they're dynamic. I heard someone earlier also say we don't talk enough about the fact not only can these be created, but they can be destroyed. The dynamic nature of digital assets means the taxonomy of digital assets is vitally important. By that very nature, not everyone gets the same treatment. And so what I love as I continue to learn about how Ghana is approaching this, using risk-based requirements with different rules for different service categories. The same exact cookie cutter rules could not apply both to exchanges and custodians, or wallet providers and brokers. They're all important. They all require thoughtful oversight, but it is not a one size fits all. Ghana made this non-negotiable, and so I'm fascinated by this as well. Consumer protection. The 2 most important things to me as a lawyer and as an educator, education, and also protection. But also, while we are innovating, it's not either or, but both and. We heard that sentiment echoed throughout these 2 days as well. Risk disclosure requirements are clear, mandatory, professional liability insurance required, dispute resolution mechanisms must be in place. These aren't suggestions. These are baseline requirements for anyone who wants to operate in Ghana. Because at the end of the day, if consumers lose trust, it's game over. This space is not the absence of trust, but well-placed trust so that people can move forward with confidence and with power. 3 is the regulatory sandbox, as I said, is one of my favorite things, and I love whenever I hear Carmel talking about it as well. Here's where Ghana got really smart. They created a controlled testing environment. I know in the US for years, I've been in the space since 2017. It was so challenging to speak to regulators and legislators about creating a public-private partnership that would ultimately hasten forward the adoption and the development of the technology. And in the absence of that, people are left to use their own devices. Technology moves forward. And so the idea that you wouldn't want some type of controlled environment where people tinker, iterate, fail fast, and fail forward, this is what that's the path that Ghana chose. It's very important. And think about what this says. It says we want innovation, but we want to understand it responsibly first. And that comes with a sandbox environment. You learn together, public and private. And if it works, then that becomes the clear path forward. That comes with the clarity and certainty that businesses need to invest and to move forward. So this is, I believe, how you encourage innovation without creating chaos. Principle 4, joint agency coordination. So the Bank of Ghana, as we heard, the SEC, working together. They've spoken to us here as well. And they could say the words better than I. So I won't repeat them, but just know that coordination is critically important. A dedicated digital assets unit within the central bank environment, coordinated examination and enforcement procedures, harmonized reporting requirements across agencies. Everybody's speaking the same language, or as I said in my keynote, singing from the same hymnal. Critically important. And principle 5, from prohibition to oversight. So you all are living that, you're right in the middle of it. It's like the philosophical foundation of how, from my perspective, Ghana moved from considering prohibition to developing partnership with industry. And that seems to be the game changer, this structured oversight that translates into clear rules, transparent processes, enforcement when needed, but space for legitimate innovation to thrive. 5 principles, not revolutionary, but practical, and I believe they work. And so now here's your question to consider. Which elements fit your jurisdiction's context? Which fit your institution's context? Which fit in the process of marketing or communications or innovation? Ghana has a parliamentary process. It has its own specific timelines. Technology marches on, but you're moving forward as well. Understanding the legislative calendar is also important because you can reasonably anticipate, but do not hold it to the letter because it is what it is, not only here, but around the world when you're dealing with legislation. But let's talk about what it means to actually make decisions. Again, you can't treat every digital asset the same way, and sometimes there is over-regulation, sometimes it kills innovation, sometimes there's too little and it becomes a free-for-all. And so I started working with various regulators on kind of a matrix. And in the interest of time, I'll kind of outline it. What my hope is to have the actual axis and matrix on the website page that I built for you. If you didn't scan the code, you can go to proftanyaevans.com/DA Summit Africa, DA Summit Africa, and it will be there. But so let's kind of talk through what this looks like, classifying assets, applying proportionate rules. And so I'll start with the matrix kind of example and talk you through what that looks like. On the vertical axis, you find basically 5 asset categories. Payment tokens like Bitcoin, stable coins pegged to cedi, dollar, euros, some other local currency. You have investment tokens that represent ownership interests, utility tokens, and hybrid models, because again, everything doesn't always fit neatly. And then on the other axis, you can see different classifications as well. Let me move forward a little bit. Oh, let me go back. Yeah, there we go. Here. And what you would be able to see are the different types of risks based upon the different type of asset. And here's an example of kind of how it would work in practice. Maybe you have a payment token, Bitcoin, ETH, something else. A lot of jurisdictions classify those as medium risk because they're established. Bitcoin has been around since January 2009. Shout out to Satoshi. Ethereum, the Ethereum virtual machine has been around since 2014 or 2015. So there's a sufficient amount of time to see the boom and the bust cycles that were talked about earlier as well. And many jurisdictions will think that there's not as much risk as something that's newer. That makes sense. Then you have stable coins pegged to major currencies. The risk level depends really, as was talked about the reserve. We know from Terra Luna and some other areas when we had algorithmic stablecoins, disaster. Not that they can't work, but we have seen epic disasters when they didn't. And so it depends on the reserve backing. Fully reserved, audited stablecoins might be at most medium risk. Algorithmic stables with no reserves, some jurisdictions might consider those to be high risk or even prohibited. And that's how it starts to work. You will think about the type of asset and the corresponding type of risk. You'll go through, I won't take you through each of them in the interest of time, but investment tokens, utility tokens, hybrid instruments, all of them will have their own risk categorization, and then you can build appropriately. So the red flags and the triggers. Beyond asset classification, you need specific triggers for enhanced oversight. I am a huge proponent and spend a lot of time teaching about governance, risk, and compliance, or GRC. And we heard people speaking about it throughout the day. You need these specific triggers for enhanced oversight to know when to jump into action. You can kind of think about this for emphasis. Transaction patterns are critically important. Let me make sure I get this up here. Oh. Transaction patterns, so anonymous transfers that look out of whack. It's just like if all of a sudden you get a notification from the credit card company that says, did you buy a laptop in Lagos? You said, no, I'm not in Lagos. Please stop that transaction immediately, right? There are certain bits of information, transaction patterns, absolutely risk triggers. Or geographic risks. Maybe there is a rogue nation and it is on some type of list and a transaction occurs out of there, or you suspect some activity even with a VPN. Geographic risk can be a flag or a trigger. Operational concerns, integration with traditional banking, but without proper controls. We heard about this kind of a bridge between traditional finance and new finance, new fintech, DeFi. What's the bridge? Is there an API failure, as we have heard? There are a lot of bits of technology connecting old to new that may not serve the intended purpose. And so operational concerns. And then finally, market behavior indicators. Potential market manipulation will always be a concern. Wherever there's money to be made, there will be scammers to be paid. And so the market behavior indicator is critically important as well. So let's talk about now, in closing, I wanted to take you through an implementation roadmap. Start to think about, now that you've assessed where you are, first going back and having that conversation with your colleagues about, here's what I learned. Let's be brutally honest about where we are, because this is where we need to be and where we want to be consistent, not only with Ghana, but with the continent and globally. And you don't need years to build regulatory capacity. The best day to start was yesterday, And the second best day is a. So this is what we do. We start now. We start where we are. You absolutely can make substantial progress in 90 days. Think about it in quarters or chunks, and I wanted to talk through what a phase might look like to offer that to you as you go. Phase one is foundation building. Those early 30 days when, again, you've done the assessment and you start mapping out and then building what you need as a solid foundation to get you where you need to be. This is about knowing, because you can't manage what you don't measure. You can't regulate what you don't understand. So that means staff development. That means legal framework assessment, reviewing your existing statutory authority, where have rules clearly worked, what rules need to be in place. You all can reasonably anticipate what's coming down the pike and prepare accordingly. And also stakeholder mapping. Who's across the other side of the table? What are their needs? How are you working together to make sure it's win-win so that you are rewarded as is the stakeholder on the other side? The first 30 days are also about information gathering. What's the actual size of the digital asset activity in your market? What are the transaction volumes? I shared as many statistics as I possibly could in my keynote, but there are many, many more. The numbers tell the story. So data collection and management and storage and protection is very, very important so that you can have that baseline data. And if something isn't working, you can pivot, but you have a solid foundation. 31 to 60, days 31 to 60, phase two. Month two is about designing. So you've gone from knowing and understanding to designing. Now you start to create your actual regulatory approach. We know that draft regulation is moving through Parliament as I speak. And based on your risk assessment and legal analysis, develop initial policy frameworks so that you can proactively meet the moment. Use the models that you have around the world, but adapt to your context and build for Ghana first and the continent always. Everything else will follow as it always has. This is the mother of all resources. So why export only to import something that already existed here? You have the resources, you have the technology, we have the people. So that's where it comes to international coordination as well, establishing information sharing agreements here on the continent and with advocates and allies. But again, continent first. Join FATF working groups, participate in regional coordination forums, and building capacity would be the final step in that first or that second 30 days. Procedure, examination tools, licenses, hiring technical experts, because at that point, you know what you have, but you also know what's missing. It was an interesting conversation to hear banks say, we need an ethical hacker to figure out where our vulnerabilities are. Every business needs to do that as well. It doesn't have to be the ethical hacker, but someone who can show you where your weak points are so that you can get the necessary resources and people in order to meet the moment. And then finally, that final phase from days 61 to 90. This is about testing. This could go on quite some time. I shortened it just for the 20-ish minutes that I have with you. But this is really, really important. You're going live carefully. This is when you start to think about and implement whatever a regulatory sandbox launch might be for you. Regulator will look different than someone who is a merchant, but think through what that means for you. Also think about initial licensing. So your licensing structure is changing in the present moment, but there are other licenses that feed into that and are necessary. Process your first applications under the new framework or what you expect it to be. Start to test now so that you stay ready so you don't have to what? Get ready. Stay ready so you don't have to Okay, it's still with me. And this is also the examination procedures and your monitoring systems as well. The success metrics that will ultimately matter, what you're looking for as in terms of milestones, by day 30, staff trained on blockchain fundamentals, legal gap analysis completed, stakeholder map with at least 20 entities identified, baseline data on market size collected. This is an active work because in this stage we are knowing. Day 60, regulations circulated for comment, or if you are not a regulator, you are observing what is being commented on. At least one international license of understanding or memorandum, an MOU, memorandum of understanding, signed, pending, budget approved, first sandbox applications received, and by day 90, accepting applications, or if you're on the other side of that, submitting them. The first pilots to begin to get data of not just knowing and not just building, but actually doing. And these are really the concrete and measurable outcomes, not we made progress or we learned a lot. You need specific actions. Otherwise, we're just talking. We'll just meet once a year. We will join for the cocktail hour, and we'll come back again next year and do the same thing. That's not what we're going to do. We will be in a different place, a better place, a more sure footing because of what we are doing today. And so in closing, just thinking about, we've covered substantial ground in these 2 days. If your head is filled and it's all swimming around, you are right where you need to be. Let it sit and absorb. Go to the cocktail reception, ask questions, engage in dialogue. Make sure that we are all connected for the continued conversation. And then understanding if you need an assessment, do that. If you need to take a closer look at the 5 principles, certainly do that. They will be at this page later today. Make sure that you understand what a 90-day concrete program will look like for you. Frameworks are actually worthless without action. Faith without works. Hey, we got that one. All right. So here's what happens next. First, access the digital resource. I see you all scanning. You're already doing that. Reach out to Peter and the organizers about taking the next steps forward, turning this discussion and these ideas into implementation. We are certainly establishing this type of network that we won't work in isolation. You go, fast, you go alone, you go far, you go together, and we are together. I thank you, Peter, and everyone who has been involved in this process. I most importantly thank each of you for your time, your attention, your hospitality, and we can do this, together. So again, thank you, thank you, thank you. Medase.
Thank you, Medase pa. All right, thank you so much. And then thank you. As John D. Rockefeller said, the secret of success is to do common things uncommonly well. So right about now, I would love you to help me bring on stage the one that saw the vision and was able to bring us all together here for this wonderful summit. Please help me bring on stage Peter Pipomaso.
Thank you very much, Benjamin. Thank you all. I know you are tired already, but I promise you that we've got cocktail reception waiting for all of us. That will give you the opportunity to be speaking to authorities like Professor Tonya. Mimi is there. I'm sure Kamel and others are also there. And you've also got your QR code for our feedback. That is also very important to us because we want to do well. Now, distinguished delegates, speakers, partners, and friends. As we bring this historic maiden edition of the Digital Assets Africa DASA 2025 to a close, I want to begin with a simple word: gratitude. Gratitude to every policymaker, every regulator, every industry leader, every sponsor, and every delegate who joined us over the past 2 days. You have not just attended an event, you have helped to shape a movement. Over these 2 days, we have heard powerful insights from the importance of credible data, as emphasized by Professor Samuel Kobina-Anim, to the urgent need for harmonized regulation across Africa, to the transformative role of tokenization, AI, and blockchain in creating an inclusive financial system. We have also seen the promise of Africa's young innovators and startups who are boldly reimagining finance for the digital age. The energy, the collaboration, and the ideas that have emerged here tell us one thing clearly: Africa is ready. Africa is ready, ready to build, ready to lead, and ready to own its place in the global digital financial economy. And today, as we close this maiden summit, I'm proud to announce that the official launch of DASA as an annual platform, a permanent fixture for Africa's digital finance ecosystem. DASA will continue to be the stage where policymakers, innovators, investors, and thought leaders gather to chart the way forward. At Promark Elite Limited, we are humbled to serve as a custodians for this vision. But the real ownership lies with all of us: governments, regulators, businesses, investors, and citizens, because Africa's digital economy belongs to Africa. Let us live here, not just with new knowledge, but with renewed determination to collaborate, to innovate, and to act with urgency. The time for Africa's digital financial future is now. Thank you all for making DASA 2025 a reality. We look forward to welcoming you again and in the next edition. And before I leave the stage, I'll ask the guys from the video team to play us a short video.
Welcome to a maiden edition of what we call the Digital Asset Summit Africa.
When we envisioned this summit, the goal was clear: to create a trusted platform where policy, innovation, and investment converge to shape Africa's place in the digital economy.
The rapid emergence of digital assets, encompassing cryptocurrencies, stablecoins, tokenized securities, and the prospective central bank digital currencies, has introduced both unprecedented opportunities and complex policy challenges. Important that African regulators actively engage in global standard-setting bodies, ensuring that the continent's perspectives are represented and that international norms are appropriately adapted to our African contexts.
Digital asset and virtual asset space is a transformation that has come to stay. This summit should not end here. Let the process continue. In fact, there will be more work to do after.
For this continent's economic future since decolonization. That's not hyperbole. This is history. Paying attention to the make or break factors, I can't emphasize enough the idea of being practical, not theoretical. People need to see it work. For policymakers, embrace evidence-based regulation. Study what works in other contexts, but design your own rules that make sense for Ghana and the continent.
DASA 2025. It's big, it's big, it's big.
And for that, we launched DASA 2026. Please go to our website that was showed there and register your interest. We'll be coming up with information to furnish you with what you know as we prepare for DASA 2026. Safe travels, and may we continue to unlock Africa's digital economy through innovation and regulation. Thank you very much.
Thank you very much. A round of applause for Peter, the convener. Thank you for making this possible for us. And thank you, our team. So if you didn't see yourself on the screen, make sure you sit somewhere. 2026 is up, so make sure you sit somewhere else so that these guys can capture you and you'll be on the screen as well. Thank you very much. All roads lead to, yes, downside for the cocktail networking together. Thank you all for coming. My name is Benjamin Oswansa. It was nice. It was an opportunity. It was a privilege having you here all. Let's all shout DASA 2020. Thank you.
Hi, Nakode here, and welcome to Africa Discourse Channel. Imagine a place where ideas flow freely, like the great rivers of our great continent Africa, where stories about innovation, growth, and then ideas that are painting and shaping Africa are being told. From the Cape to the Sahara, and then from the tech startups happening in Lagos to Nairobi, where the tech innovations are, ADC brings you the stories that matter, the conversations that are inspiring our generation, and then ideas that are transforming Africa. But hey, it's not always serious business here at ADC. We also give you the scoop into the latest trends happening around the continent, untold stories in Africa, and a large dose of fun and entertainment. Join us as we delve in, explore, laugh, share ideas, share stories, and maybe you can find your next big idea on Africa Discourse Channel. Welcome to Africa Discourse Channel. Catch up with us at www.discoursechannel.com and follow us on all our social media pages at Africa Discourse Channel and get the latest scoops into the trends happening in Africa and news about Africa around the globe.